Right, so all of you back? Yes, so we started with the company audit chapter in which we have to discuss section 138 to section 148. Section 138, we will see it along with the chapter of the internal controls, risk assessment and internal controls. Right, so right now we need to study section 139 to section 147, which is regarding the statutory audit, and you have section 148, which is regarding the cost audit. Like few of you have a questions like, does every company, so we are talking over here about the internal audit, then we are talking about the statutory audit, and then we also have the cost audit. Okay, so few of you have a question, does every company need to get a stat audit done? Yes. Does every company need to get an internal audit done? No. We have the applicability of section 138. Okay, which companies are required to get an internal audit done and which companies don't need to get an internal audit done. Okay, I just need to increase the screen size. Right, which companies don't need to get an internal audit done. And cost audit, again, it is where the central government will prescribe okay, which companies are required to get a cost audit done. Right, so stat audit compulsory for each and every company, but internal audit, cost audit may or may not be required to be done. Right, stat audit has to be done by a chartered accountant, CA with COP of the ICAI. Cost audit has to be done by the CMA, right? The cost management accountant. And internal audit, it could be done by chartered accountant, it could be done by the cost accountant, or it could be done by any other professional as may be decided by the board of directors, right? So this is like which companies have to get this audit done, the applicability, and also what are the qualifications for the auditor, okay? Who can be appointed as internal auditor, stat auditor, and the cost auditor. And what we are studying now is section 141, which is regarding the qualifications and the disqualifications of the statutory auditor. Who can be appointed as an auditor of a company? An individual who is a chartered accountant holding a certificate of practice of the ICAI, right? So CA with COP of ICAI, or a firm where majority of the partners of the firm are chartered accountants practicing in India. And then 141 subsection 2, it says a firm includes an LLP, but only those members of the LLPs are allowed to act as an auditor who are the chartered accountants, right? Only the chartered accountants, okay, right? Any one partner of the firm or the LLP is disqualified, the entire firm is disqualified. Like say example, A, B, C and company, 3 partners in a firm, right? Say A is going to do the stat audit of Growth Limited. A has to do the stat audit of Growth Limited, and the relative of B is holding securities of face value of rupees 2 lakh in Growth Limited. Say example, the relative of B is holding securities of face value of 2 lakh in the Growth Limited. What does it say? Any one partner of the firm or any relative or any person, if any one of them disqualification is attracted, the entire firm is disqualified from being appointed as an auditor. Right? So can the firm do the audit of Growth Limited? No. Even one partner of the firm is disqualified. Any one relative attracts the disqualification, the entire firm cannot be appointed. You will say, ma'am, A has to do the audit, B's relative is holding the share, but they are partners in a firm, the entire firm is disqualified to be appointed as an auditor. Do you get this point over here? Okay. And all these disqualifications, like you are thinking of, you know, why a body corporate cannot do the audit, or why an officer employee of the company cannot do the audit, or why there is a limit of if you're indebted you cannot do the audit, or if you've given a guarantee why you cannot do the audit. The entire logic behind these disqualifications of the company auditor is in order to ensure the independence of the auditor. It is in order to ensure the independence of the auditor. Rather, if you look at the title of the audit report also, you know, audit report, the title of the audit report is also, it is independent auditor's report. Right? So the auditor has to be independent. It is the independent auditor's report. Right? So it's independence of the auditor super important. So all the disqualifications of the auditor have been put in order to ensure the independence of the auditor. It says if you are an officer employee of the company, will you be independent in forming an opinion? If you are an officer employee of the company, will you be independent in forming an opinion? No, you will not be independent. Okay, but now, you know, the code of ethics, like chartered accountants, they have the code of ethics. And just as for a company, there is Companies Act. For a chartered accountant, there is the Chartered Accountants Act 1949. Right, you have, if you are a company, you are regulated by the Companies Act. If you are a chartered accountant, you are regulated by the Chartered Accountants Act 1949, in which they have given the code of ethics. Right, so now there are some requirement of independence given in the disqualifications of company auditor. Like say example, person, relative or partner. So if I want to do the audit of Growth Limited, I should not hold the share. Relative cannot hold exceeding face value of rupees 1 lakh, and partners also cannot hold a single equity share. If any of them hold a single equity share, then the firm will be disqualified under 141 3D1. Okay, but now anywhere in the disqualification, is friend mentioned? That friend cannot purchase the share? You understand? I cannot hold, my partners cannot hold, my relatives cannot hold exceeding rupees 1 lakh. But is it given over there that friend cannot hold? No. So now what happens, say today is 24th of April 2026. And tomorrow the results of the company, 25th April 2026, you know the results of the company are going to be declared on the stock market. You know, and there is the market anticipation regarding what would be the profits of the company, what is the expected profit of the company. And today evening, do I have the profit and loss account of the company in my hand? Do I have, I'm the auditor of the company. Do I have the P&L of the company in my hand? Say market expectation is that the company will show a profit of 2,000 crore. You know that actually in the profit and loss account there is a profit of 3,500 crore. And you know that tomorrow, the moment these results are declared on the stock exchange, the share prices will shoot up, because the results are much more higher than what is expected. So now I cannot hold a share, relative cannot hold a share, partner cannot hold a share. So you call up your friend and you tell your friend, let's do intraday trading, one-day trading. You know, tomorrow morning you tell him that you purchase 1 lakh shares, and then later on we'll do 50-50. Right, so are you independent as per company law? Yes, because company law, have you attracted any of the disqualification? No. But in this case, what is happening? There is only the independence in the appearance. No, there is only the independence of the appearance. But is there independence of mind? No, there is no independence of mind. Whereas the code of ethics, what does it require for the chartered accountant? Independence not only of the mind, but also the independence of the appearance. What does it say? Not only be, but also appear to be independent. And not only be, but also appear to be independent. Okay, so now I am asking you, what you are doing? So you say, ma'am, I am studying. So as per your mind, what are you doing? As per your mind, what you are doing, you say, ma'am, I'm studying. But what everybody is seeing around you are saying, huh? What? This person is studying? Who told? Rumor. You understand? Look at it. It never looks like, is this the way you study? Looking here and there, roaming here and there, after every 7 minutes coming into the kitchen, what is there for food, opening the fridge, checking what is there for eating, who rang the doorbell, who has come over there, roaming around the whole house, checking washing machine, how much time is remaining. Arey, why you need to check all this? Roaming around whole house. And why so much time here and there, everything? So in that case, are you independent in mind? Arey, I thought I have come to teach the students. I never knew I have been called to a zoo. Zoo is always there. Wolf pack. Oh, my God. You can work, you know, some movie, they require the sound effects, no, from behind. So there, you know, that if CA doesn't work out for you, because there are less chances of CA working for you, so then you can think of that as an alternative source of, you know, career opportunity. Anyways, right. So what are we talking about over here is independence not only of the mind, but also the independence of the appearance. What does it say? Be and appear to be independent, right? So the point which I want to drive in over here is that all the disqualifications of the company auditor have been put in place in order to ensure the independence of the auditor. And whatever is mentioned in company law is a very limited set of disqualification. Like, you know, if you working in a big four or so, now one of the partner of the CA firm is going to sign the audit report. You understand? No, on behalf of the firm, one of the partner of the firm is going to sign the audit report. But say in that big four, there are 600 partners. Out of those 6, now they form different small firms over there. But say there are 600 partners in Deloitte, India. In that firm, there are 4,000 chartered accountants who are working. There are some 7,000 articles and unskilled labor. You understand, who are getting skilled now, work in progress. Where you get casual labor at such cheap cost? Never. Never ever will you find this, what you say, articles type. So now these 7,000 articles are working, in the Big Four over there. Okay, now this one partner of the Big Four is signing the audit report of Growth Limited. One partner of the firm. But it says the entire firm has to comply with the requirement of independence. Like say if you are doing the audit of say Manyavar or so, and they are coming up with an IPO, the entire firm cannot subscribe to the shares of that particular company. You understand? And an annual declaration of independence is taken from all the firm personnel. Right? An annual declaration of independence is taken from all the firm personnel. Right? Rather say, you join a Big Four for your articles and they tell you that, oh, from tomorrow you have to go for the audit of Tata Motors. And then you say, oh, wow, Tata Motors, my uncle works in the accounts department over there. Out. They will never send you for the audit of Tata Motors. You understand? Why? In order to ensure the independence of the auditor. In order to ensure the independence of the auditor. But just because you comply with the requirement of law, that does not mean that you are completely independent. Because independence should not be only of the mind, it should also be of the appearance. That even if a third party looks at you, even they should say, yes, this auditor is independent. Right? That he is not biased in his decision making, he does not compromise on his objectivity or so. Right, so anyways, right now what are we discussing? We are discussing the disqualifications of the company auditor. What is the first disqualification? Body corporate other than the LLP, right? Why? Because company form of organization allowed to do, yes, not allowed to do the audit, but LLP form is now given in the list of the qualifications. And LLP is there in the qualifications. That is why removed from the disqualification. Then officer or employee of the company, right, cannot do the audit of the company. Then a person who is a partner or who is in the employment of an officer or employee of the company. Then what does it say? Person, relative or partner holds any security of or interest in any of the 5 companies. Which are the 5 companies? Company, holding company, subsidiary company, associate company, any other subsidiary of that holding company. However, relative can hold security up to the face value of rupees 1 lakh in the company. And if relative exceeds the limit, then corrective action can be taken within the 60 days. Okay, right. Then what does it say? Person, partner, relative, indebtedness exceeding rupees 5 lakhs. So person, partner, relative in all the 5 companies, indebtedness up to rupees 5 lakh allowed, exceeding rupees 5 lakh disqualified. And then 141 3D3, person, partner, relative has given guarantee in connection to the indebtedness of a third person. What does it say? Person, partner, relative in all the 5 companies up to rupees 1 lakh allowed, exceeding rupees 1 lakh disqualified. Right? So this is 141 3D1, 141 3D2, 141 3D3, yes, 141 3D, yes, 141 3A, 141 3B, 141 3C, 141 3D, and in 141 3D you have 141 3D 1, 2 and 3. Right, 141 3D 1, 2 and 3. Right, in the exams do I need to write like 141 3D2 of the Companies Act 2013? What to do? Ma'am, should I write, is it okay if I write only 141 3D? Is it okay if I write only 141 3? Is it okay if I only write 141? Or is it okay if I only write as per the relevant provisions of the Companies Act 2013? You should still thank God. Why thank God? Ki you wrote of Companies Act 2013. And you did not write as per the relevant provisions of the Negotiable Instrument Act or the Contract Act or something like that. No. So how much to write? How much burden you should take on your back? Only how much you can sustain. No need to show off. You understand? Now they say, okay, everybody, I want you to write down 2 pages today. Ma'am, I will write down 30 pages. What big story you are telling? And that person who says 30 pages doesn't even write 30 words. But big story. Okay, so anyways, like what to write? One thing, whatever you are 100% sure, only that much to write. But ma'am, it is better, no, if I write 141.3, it will look more better. What if I write 141.3D? And then you know it is better. So nothing harm in writing the more relevant and the more accurate one. But I think we can at least reach to 141.3 or 141. And so much time we'll be revising it that as per section 141 of the Companies Act 2013. And in case if you are dicey, you get confused between 141 tha ya 142 tha, yaad nahi abhi. So as per the relevant provisions of the Companies Act 2013. Okay, right. So anyways, we talked about 141.3D. Right, now coming to 141.3E. Are you all with me? Right, what does it say? 141.3E. Right, now what is 141.3E? It says a person or a firm. Right, you know person? Yes, 141.3E, I myself. So person. Right, or the firm. Person or the firm. 141.3E. What does it say? Person or the firm is having any business relationship. Person or the firm is having any business relationship. Now business relationship with how many companies? Oh my God, they are so terrific. How particular they are in the drafting of the clauses. Now they say business relationship in 6 companies. Right, a person or a firm is having any business relationship now, but with how many companies? 6 companies. So 141.3E, you have the 6 companies. Which are the 6 companies which you have over there? Company, holding company, subsidiary company, associate company, any other subsidiary of the holding company, or any other subsidiary company of the associate company. So subsidiary of associate also gets added for the purpose of 141.3E. Subsidiary of associate also gets added for the purpose of 141.3E. Right, so if I have to do the audit of Growth Limited, if I have to do the audit of Growth Limited, neither me nor my firm, and firm includes an LLP, should have any business relationship with Growth Limited, holding company of Growth Limited, subsidiary company of Growth Limited, associate company of Growth Limited, any other subsidiary of that holding company, or any other subsidiary company of the associate company. Right, subsidiary of associate gets added for the purpose of 141.3E, right, for the purpose of the business relationship. So it says if you are having any business relationship with any of these 6 companies, you are disqualified from being appointed as an auditor of the company. Okay. Now, does a company need to get a stat audit done? Yes. Do they also need to get a tax audit done? Do they also need to get, if 1 crore 50 lakh is exceeded, do they also need to get a tax audit done? Okay. So now statutory auditor, C.A. Sparkle, is doing the statutory audit. Now they are telling C.A. Sparkle, you do the tax audit for us. Right? C.A. Sparkle, you do the tax audit for us. But now if C.A. Sparkle does the tax audit for Growth Limited, what will happen? Business relationship. You understand? Right? C.A. Sparkle, if he does the tax audit for Growth Limited, then it will lead to business relationship. So that is why they have created the exception over there. What does it say? A person or a firm, if they are having any business relationship. However, what are the exceptions? It says commercial transactions. And commercial transactions for rendering the professional services as mentioned under the Chartered Accountants Act, that business relationship is allowed. Commercial transactions for rendering the professional services as mentioned under the Chartered Accountants Act, those commercials, those business relationship is allowed. So if I'm the statutory auditor of the company, right, and they also want me to appoint for the tax audit work, will it be allowed? Yes, because it is commercial transaction for rendering the professional services as specified under the Chartered Accountants Act 1949. Okay. And now, say I am doing the audit of Apollo hospitals. Are you getting this? I have to do the audit of Apollo hospitals. And then I say I want to go for a medical checkup to Apollo hospital. They say, CA auditor, don't go to Apollo hospital. Why? Business relationship, disqualified. If I want to do the audit of Airtel, array, don't take SIM card of Airtel. Why? Business relationship. Auditor wants to eat food at Marriott. They say, auditor, don't eat food at Marriott. Why? Business relationship. Auditor wants to go from Mumbai to Delhi by Indigo Airlines, but he wants to do the audit of Indigo. Auditor, don't go. When draft of Companies Act 2013 came, that time they said person or a firm has any business relationship, out. Out means disqualified. Person or a firm is having any business relationship, it says out. You are disqualified. Then they asked the suggestions from the chartered accountants and everybody regarding, the draft company law. What is your suggestion? Auditor said, our basic living will be miserable. Like, they say you cannot, if I want to send a courier by DTDC, you cannot, either you send courier or you do audit. You understand? No. You either do the audit or you send the courier. Otherwise, if you're doing audit, you can't send courier. Why? Business relationship. Then they said no problem. And now what is the second exception? Commercial transactions. That too, what does it say? In the ordinary course of business. In the ordinary course of the business. And this, so not in the, what do you say? Not in the ordinary course. It's in the normal course of business. That too at the arm's length price. Okay, if you send a courier to DTDC, they charge you 220 rupees per kg. If I send a courier to DTDC, to me also they charge 220 rupees per kg. So it is arm's length per price, and that too only as a customer. Or that too only as a customer, that business relationship is allowed. Right? So I'm supplying some medicines to Apollo Hospital. No. Because then that is as a supplier. I've provided my property on lease to Marriott for constructing a hotel. No, not as a lessor or a lessee, because that is not as a customer. Are you understanding? I'm providing some services to this airline company. No, then again not allowed. What does it say? The exception is commercial transaction in the ordinary course of business at the arm's length price, and that too only as a customer. That too only as a customer, right? So what is 141(3)(e)? Person or a firm is having any business relationship with 6 companies. However, what business relationship is allowed? 1, commercial transactions for rendering the professional services as given under the Chartered Accountants Act, and 2nd, commercial transactions in the ordinary course of business at the arm's length price, and that too only as a customer. Are you understanding this one, everyone? Right? A person or a firm. What does it say? Whether directly or indirectly has any business relationship with company, subsidiary, holding, associate, subsidiary of such holding company or the associate company. That's what I told you, na? Subsidiary of associate is also added for the purpose of 141(3)(e) of such nature as may be prescribed. However, what does it say? The term business relationship shall be construed as any transaction entered into for a commercial purpose, except. What is except? Commercial transactions which are in the nature of the professional services permitted to be rendered by an auditor as per the Companies Act and the CA Act. What is this CA? Chartered Accountants Act 1949 and the rules or regulation. And 2nd, commercial transactions which are in the ordinary course of business of the company at the arm's length price, like sale of products or services to the auditor as a customer in the ordinary course of business by companies engaged in the business of telecommunication, airline, hospital, hotel, and other similar businesses. Are you understanding that? Person or a firm is having any business relationship with the 6 companies, then disqualified. But what business relationship is allowed? What commercial transaction is allowed? 1, for rendering the professional services, and 2nd, as a customer in the ordinary course of business, and that too at the arm's length price, right? That would be allowed. Okay, right. I am a director in a company. Can I do the audit of that company? Where am I disqualified? Officer or employee of the company, 141(3)(b). Okay. Now, my relative is a director in the company. Can I do the audit of that company? My relative is a director. Yes, my brother is a director in Growth Limited. Can I do the audit? I am a director in Growth Limited. Can I do the audit? I am a director in Growth Limited. Can I do the audit? No. My brother is a director in Growth Limited. Can I do the audit of Growth Limited? Right, that comes under 141(3)(f). Relative is a director. Yes, relative is a director or is in the employment as a director or a key managerial personnel of the company. What is KMP, everyone? Key managerial personnel of the company. So relative is a director or relative is in the employment as a director or a key managerial personnel of the company, only of the company. Okay, so my brother is a director in Growth Limited. Can I do the audit of Growth Limited? My brother is a director in Growth Limited. I am a director in Growth Limited. Can I do the audit of Growth Limited? No, my brother is a director in Growth Limited. Can I do the audit of Growth Limited? No, my sister is a director in the subsidiary of Growth Limited. Can I do the audit of Growth Limited? I am a director in Growth Limited. Can I do the audit? No. My brother is a, can I do the audit? No. My brother is a director in Growth Limited. Can I do the audit? No. My sister is a director in the subsidiary of Growth Limited. Can I do the audit? Yes. Because when I cannot do the audit, when relative is a director or is in the employment as a director or a key managerial personnel of the company. Yes, so no holding subsidiary associate over there. Are you understanding 141(3)(f)? What is 141(3)(f)? Relative is a director or is in the employment as a director or a key managerial personnel of the company. That is 141(3)(f). Right? Then after 141(3)(f), you have 141(3)(g). Right? What is 141(3)(g)? It says CA is in full-time employment elsewhere. And a CA is in full-time employment elsewhere, right? So what happens? There is a partnership firm in which there are three partners, A, B, and C. Okay, so what is the name of the firm? Say ABC and Company, Chartered Accountants. And this fellow C, he is also in full-time employment elsewhere. Right, so he is a CA with COP of ICAI. He has taken permission from ICAI that I also want to be full-time employee, and he's also working full-time, say, in Infosys. So now, on behalf of this chartered accountant, who is full-time doing employment also along with his practice, can you take any company audit in his name? No, he is disqualified to be appointed as an auditor. And these two other CAs, A and B, can you accept company audits in their name? A and B. C is in full-time employment elsewhere. Can he be a partner of your firm? Yes. Can he be a partner of your firm? Yes. But can you accept any audits in his name? No. Why? Because he is in full-time employment elsewhere. But the other two partners of the firm, can they do company audit? Yes. But what is the limit for their company audits? It is 20 audits per CA. Right, so say these two auditors are already doing the audit of 20 companies. So they already have 40 company audits. So if this is going to be their 41st audit, then they are disqualified. So basically under 141(3)(g, basically under 141(3)(g, we are talking about the ceiling on the number of the audits. We are talking about the ceiling on the number of the audits. So what is one blanket disqualification over there? CA is in full-time employment elsewhere. Out. Right? No company audit can be accepted in the name of the CA. And any other, what does it say? If it exceeds more than the 20 company audits. Right, exceeding more than 20 company audits, then you are disqualified. Now, listen to me. While counting this limit of 20 company audits, which are the audits which are to be excluded? Right, excluding the audit of OPC. Do you know OPC? One person company. Then SC, that is the small company. Then DC, that is the dormant company, and the private companies having the paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar. What does this mean? Okay, CA is in full-time employment elsewhere, no company audit in his name. And apart from that, if already holding the audit of more than 20 companies. But while counting this limit of 20, which are the audits which are not to be counted, excluding one-person company, small company, dormant company, and the private companies having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar. Okay. So now there is a CA firm, 3 partners, A, B, C. Right? C is in full-time employment elsewhere. Example. So now how many audits per CA? 20 and 20. So maximum how many company audits they can do? 40 company audits. Are you getting that? Okay. So this is their limit on how many company audits they can do. Say currently they are doing the audit of 38 companies. Say example, they are doing audit of 38 listed companies. And just to keep the example simple, they are doing the audit of 38 listed companies, and now they are proposed to be appointed as an auditor of 50 one-person company, 50 small companies, 50 dormant companies, 50 private companies having paid up share capital of less than 100 crore, that is say having paid up share capital of 90 crore each, and 10 private companies having the paid up share capital of 110 crore each. Which of the following audits ABC and company can accept? Can they accept one person all 50 audits? Yes. Small company, can they accept all 50? Government company? Yes. Private companies paid up share capital of less than 100 crore each? Yes. But out of this 10, they will have to select any 2. Because already they are doing the audit of 38 companies. So how many more audits they can accept? They can only accept the 2 more audits. Okay. Now, can it happen that one individual, he is a partner in more than one CA firm? Can it so happen that I am a partner in ABC and company, I am a partner in AMN and company, I am a partner in APR and company, right? So is it per firm? So A is a common partner in these 3 CA firms. So is it per firm 20 audits? Is it like through, so I want to do more 20 audit, I become partner in one more firm and I get more 20 audits? No, the limit is per person and the limit is not per firm. So all the firms put together, what is the ceiling on the number of audits? 20. See, if I am a partner only in one firm, then in that one firm only 20. But if say I am a partner in 3 firms, then all 3 firms put together, the limit is 20. Then how to divide the 20 among the 3 firms? I can do 20 company audits now, but now I am a partner in 3 firms. It says it is their own affairs. It is the own affairs of the partners regarding they have to decide, okay, through this firm I will do 10 audits, through this firm 5 and through this firm 5. Can they decide 18-1-1 also? Can they decide 20-0-0 also? Yes. Can they decide 10-0-10 also? Yes. Anything which is mutually agreed upon by the partners. How they divide the audit amongst the firms where they are the partners, that is their own affairs. But limit is per person and it is not per firm. I hope you are all able to follow me. Yes, what does it say? 141(3)(g). What is the disqualification over there? CA is in full-time employment elsewhere. Out. No company audit for you. And apart from that, if you are already holding the audit of 20 companies, then no 21st audit for you. Then you are disqualified to be appointed as an auditor of the company. Are you understanding that? So ceiling on the number of the audits. What is the limit? 20 audits, right? So what is the limit for stat audit? What is the limit for the stat audits? How many stat audits can be accepted by one CA? 20, excluding the audits of the one-person company, small company, dormant company, private companies having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return. Just for your information, or I'm asking you, do you know, is there any limit on tax audits? How many tax audits one CA can do? Stat audit, 20. Tax audits, not more than 60 tax audit assignments. That is the limit which is given under the Chartered Accountants Act. Okay, what is the limit for stat audit? 20. Okay, one chartered accountant, how many stat audits he can do? 20. One chartered accountant, how many tax audits he can do? 60 tax audit. Non-corporate, corporate assessees all put together. How much is the limit for the tax audit assignment? 60. Are you able to follow this, everyone? Okay. Right, so 141.3G. What is 141.3G? CA is in full-time employment elsewhere. CA is in full-time employment elsewhere, or already doing the audit of more than 20 company audits, right? Holding audit of more than 20 companies, however, excluding the audits of the excluding the audits of the one-person company, small company, dormant company, private companies having the paid-up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar. Are you understanding this, everyone? Disqualifications of the company auditor. It says you are a chartered accountant, CA with COP of ICAI. Are you eligible? CA with COP of ICAI. Are you eligible? Yes, but you are in full-time employment elsewhere. Then you are disqualified. Then you are disqualified. Then you are already doing audit of 20 companies. Are you qualified? No, you are disqualified to be appointed as an auditor. That is the ceiling on the number of the audits. Is everybody with me? Okay, right. So we have 141.3F. What is 141.3F? Relative is a director, or is in the employment as a director or a key managerial personnel of the company. Right? Then 141.3G, person who is in full-time employment elsewhere, or a person or a partner of the firm holding appointment as an auditor if such person or partner is, as at the date of appointment, reappointment, holding appointment as an auditor of more than 20 companies other than the one-person company, dormant company, small company, private companies having paid-up share capital of less than 100 crore, and available only if this company has not made a default in the filing of the financial statements and the annual return to the registrar. What does this mean? Has not made a default? So say there is a private company, right? So you are doing the audit of 38 listed companies, okay? So two partnership firm, A, B, C, 3 partners, but C is in full-time employment elsewhere. So what is the limit for company audits? 40, okay, right? So now you are proposed to be appointed as an auditor in 10 one-person company, 10 small companies, and 10 dormant companies, and then 10 private companies having paid up share capital of 90 crore each. Right, 90 crore each. Can you accept these audits? Yes, but say out of these 10 companies, 4, they have made a default in the filing of the financial statements and the annual return. Right, so now are these 4 to be included in the limit of 20? Yes. Ideally, had there been no default, then we would have excluded. So because paid up share capital is less than 100 crore, but now though paid up share capital is less than 100 crore, there is a default. So will you count this in your ceiling of audits? Yes. Will you count it in your ceiling of audit? Yes, because there is a default. So now out of this 4, maximum you can accept any 2, and other 6 companies where there is no default, that anyways you can accept. That anyways you can accept. But where there is a default, then though the paid up share capital is less than 100 crore. See, paid up share capital is less than 100 crore. So ideally it is not to be included because paid up share capital is less than 100 crore, but there is a default, then you will have to include it. Are you able to follow this, everyone? Okay, right, so CA is in full-time employment elsewhere or already holding the audits of more than 20 companies. And then after that you have 141.3H. What is 141.3H? A person, right, who has been convicted by a court, right? A person who is being convicted by the court for an offense involving fraud. And so this person, chartered accountant, an order has been passed by the court saying what? That he's been involved in the fraud, and a period of 10 years has not elapsed from the date of such conviction. And a period of 10 years has not elapsed from the date of such conviction. Right? So in 2020, say the chartered accountant, he was convicted by a court that you have done a fraud. Court passed an order against this chartered accountant. So now from 2020, when the order was passed by the court, up to 2030, this chartered accountant, he cannot do any company audit. And 10 years. And here there is a, what do you say, a period of 10 years. And now, what do you say, not allowed to do the company audit once he's been convicted by a court for an offense involving fraud for a period of 10 years. Right, so once CA has been caught committing a fraud, next how many years he cannot do company audit? 10 years. After 10 years, so 2020 court passed an order. So up to 2030 he cannot do the company audit. 2031 can he do the company audit? Yes. Are you understanding this? Person convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. If period of 10 years is elapsed, then is he qualified? Yes. What are we studying? We are studying the disqualifications of the company auditor. So what does it say? A person shall not be eligible for appointment as an auditor of a company if he is convicted by a court for an offense involving fraud and a period of 10 years has not elapsed. If it is elapsed, then he can be appointed as an auditor of the company. Okay. Right. So what are the 8 disqualifications which we have seen so far? Right, body corporate other than the LLP, then officer or employee of the company, then a person who is a partner or who is in the employment of an officer or employee of the company, then person, partner, relative, holds any security of or interest in the 5 companies. However, relative can hold the security up to the face value of rupees 1 lakh in the company, and if relative exceeds the limit, corrective action can be taken within the 60 days. Then indebtedness exceeding rupees 5 lakh, exceeding rupees 5 lakh. However, all the 3 in all the 5 up to rupees 5 lakh allowed. Person, partner, relative in 5 companies up to rupees 5 lakh allowed. Then has given the guarantee or security in connection to the indebtedness of a third person exceeding rupees 1 lakh, and all the 3 in all the 5 up to rupees 1 lakh allowed. Then 141(3)(e), person or a firm is having any business relationship but now with the 6 companies. Which is the 6th company which gets added over here? Subsidiary of associate. However, what business relationship is allowed? One as a progress for commercial transactions for rendering the professional services, and second as a customer in the ordinary course of business, and that too at the arm's length price. Is it right? Right. And then after that, relative is a director or is in the employment as a director or a key managerial personnel of the company. Is it right? Right. Then CA is in full-time employment elsewhere or already holding the audits of more than 20 companies, excluding the audits of 1-person company, small company, dormant company, private company having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar, and person convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. Yes, and a period of 10 years has not elapsed from the date of such conviction. Are you able to understand this? Right, the disqualification so far? Okay. Right. Now, what did I say? Okay, you are doing the stat audit of Growth Limited. You are doing the stat audit in a statutory audit, true and fair audit of Growth Limited. Now, Growth Limited wants to appoint you to do their tax audit. Can they appoint you to do their tax audit? Yes. Can statutory auditor be appointed as the tax auditor? Yes. But can statutory auditor be appointed as an internal auditor? Never. And a statutory auditor, no, he cannot be appointed to. You need to know this. This is given again told by ICAI, that statutory auditor, internal auditor and the cost auditor, they are mutually exclusive. So if one CA firm is doing the stat audit of Growth Limited, that firm cannot do the internal or the cost audit. If you are doing the internal audit, you cannot do the stat or the cost audit. If you are doing the cost audit, you cannot do the stat or internal audit. Any one of the 3. If I am multidisciplinary firm and I am doing the stat audit of Growth Limited, can I do the internal audit or cost audit of Growth Limited? No. I'm doing internal audit. Can I do stat and cost audit? No. If I'm doing cost audit, can I do stat and internal audit? No. I cannot be doing the stat or the internal audit. Are you understanding that? Okay. Then there is one more point over there. Okay. Internal auditor cannot be appointed to do the tax audit. I'm the internal auditor of the company. Can I do the tax audit of that company? No. But statutory auditor, can he be appointed to do the tax audit of the company? Yes. Are you understanding that? Internal, this is all clarifications given by ICAI, that if I'm an internal auditor of a company, can I do the tax audit of that company? No. Cost accountant, no question of he doing the tax audit. So that's out of question. Statutory auditor, can he be appointed to do the tax audit of a company? Yes. I am doing the stat audit of Infosys. Can I do the tax audit of Infosys? Same person? I am the statutory auditor of the company. Can I do the tax audit of the company? Yes. Internal auditor cannot be appointed as tax auditor, but can statutory auditor be appointed as tax auditor? Yes. So now, am I providing other services other than my stat audit services? Now, am I doing some other work for my client other than my stat audit services? Right. So now what does it say? These other services. So if an auditor of a company is providing the other services to the company, these other services are to be approved by. These other services are to be approved by, okay, now I'm coming to a new term over there called as the audit committee or the board of directors, as the case may be. Right, audit committee or the board of directors, as the case may be. Right, so statutory auditor, if you want to provide the other services to the company, who needs to approve these other services? The audit committee or the board of directors of the company. Okay, now we need to understand what is this audit committee, board of directors and all. Okay, so one in a company, so I'll complete with section 144 later, but first we'll pick up this term audit committee and board of directors. Okay, so now in a company, you know, no, that the owners and runners of the company are different, and managers of the company, and then you have the owners of the company. Who are the owners of the company? Shareholders. But are they participating in the day-to-day operations of the company? No, the company is being run by the board of directors. It is being run by the board of directors of the company. Okay, now minimum 6 directors should be there in a company. In a listed company and all, there are requirements like minimum 6 directors or so. Okay, now in this board of directors, like you know, in your college also, if there is some event, in the college also, if there is some event, okay, now you have some, a student committee, some council committee over there, and under this student representative council, say that you have the student council, and under the student council, what you do, you make the different committees, right? You have the events committee, you have the stage committee, then you have the refreshment committee, which will take care of all the refreshments or so, then you have the guest committee, who will send all the invitations and so. Right, so you have the student council in which say there are 20 members, and then from amongst these 20 members, what you do, you make small committees amongst them. You know, so can one person be a part of more than one committee? Yes. Okay, you are a part of the event committee also, you are a part of the stage committee also or so. And there might be some person who are only on the council, but they are not part of any of the committee. What do you think? You're understanding? Okay, that's good then. Okay, right. So what am I talking about over here? Okay, student council. There are thousands of students in the college. Out of that, there's 20 are the council. Okay, now from these council, they make the different committees. Right, so can one council member be a part of many of the committees? Yes. Can it happen that you're not a committee member, but you're only on the council? Yes, that is also possible. Okay, now similarly in a company, you have the board of directors. Similarly in a company, you have the board of directors. And what these board of directors do now, they have to constitute a lot of committees. I'll just write it on the next page. You know, listed companies, they have to have a code of corporate governance. And the company has to be running in the best interest of the stakeholders. Company has to be run in the best interest of the stakeholders, the shareholders of the company. So these board of directors, now they make different committees. Like one committee is the audit committee, right? Then after the audit committee, we don't have it in our intermediate syllabus, but yeah, there is something called as the stakeholders relationship committee. Okay, you are a shareholder of the company and you're not receiving the dividend on time, or you had asked for the annual report but you did not get the annual report, or you had applied for transmission of share but the transmission of share didn't happen. So who will look into the grievances of the stakeholders? So who will look into the grievances? The stakeholders relationship committee. Then who can become a director of the company? And also once you become a director of the company, how much remuneration to be paid to the directors? For that also we have a committee called as the nomination remuneration committee. Now running an organization, is there a lot of risk involved? Like competition, technology and all these are the risk, government policies, right? So to manage the risk, you have a committee called as the risk management committee. Then certain companies, they at least 2% of the average net profits of the immediately preceding 3 financial year, they have to contribute for CSR purposes, right? So for that you have to constitute a CSR committee. And you have to constitute the CSR committee. So do you understand? Just as the student council and so many committees, similarly over here you have the board of directors and you have the various committees under them. Okay, now the committee which we are talking about right now is the audit committee. Okay, now is every company required to constitute an audit committee? See, every company, do they need to get an audit done, stat audit done? Yes, but is every company required to get constitute an audit committee? No, we have section 177 of the Companies Act 2013, which is regarding the audit committee. Right, so let us just quickly go to the applicability of section 177. Are you all with me? Yes, application of section 177, applicability, which is regarding the audit committee. Okay, now which companies are required to constitute an audit committee? One thing, you put it in your permanent memory. One thing, you put it in your permanent memory. Whenever a list of applicability is being prepared, who is the first one to go and stand in the list? Listed company. And anything applicable, becoming a listed company is like maintaining a white elephant. Can you imagine white elephant, like how this AC is white in color or the screen over here? And white elephant. Now just imagine how it will dirty itself. You understand? No, the grey color elephant, even dirty, doesn't look dirty. You understand? It becomes light grey to dark grey, but still grey. But white, very difficult. No, white elephant. You have to keep on scrubbing it, keep on cleaning it and continuously maintaining. So it says, oh, you say, the daydreaming. Daydreaming, fantasy thinking, magical thinking. That now I cleared 12th standard, I got, 99.93%. I don't know how you get so much percentage, but they get. Okay, that much percentage. Then 12th also, merit, then foundation also 383 out of 400. कैसे आता है? Audit they get accounts. Audit तो not there in foundation. Otherwise probably would not reached here. But so, accounts 97, 99, and economics 40. Economics, no great expectation, 40. Law and quantitative, maths they get, very good, 100. 40, maths also 40. Huh? Economics 90, okay. Maths 40, okay. Everybody has their own specialities and weaknesses. Okay, right, so anyways, then the foundation over there. Then after that started coming for intermediate. Oh my God, so many books. And then amalgamation and partnership, and then जो सोचा था उससे बहुत कुछ अलग होने लगता है. When you clear foundation, big antler. Have you seen deer? DEER? Plural is also deer only, not deers. Anyways, we are not doing English class, but deer, have you seen antler, antelope, a big, big antler? Foundation student, result come, first attempt clear foundation. 4 feet antler. Okay, then I comes into the picture with a sword, hunter, and then antler 2 feet cut, next 2 feet cut, then head down. You understand that? Anyways, then inter cleared. Then did articleship in Big Four. Then Big Four article, then assistant manager, deputy manager, manager, senior manager, director, partner, CEO. World CEO, global CEO. Global CEO, package of 12 crore. Right, so then all financial goals achieved in life. So now you want to take risk, take some risk, contribute to society, give back to society, philanthropy and all of that. You don't want to be an employee, you want to become an employer, you want to create employment and generate employment and all of that. So then you start your own company, startup, and a Shark Tank. Some idea they get how to fold a napkin and they ask for funding of 20-40 lakh. I don't know. Okay. Right. So some idea they come up. Then Shark Tank, then unicorn, and a startup, and then valuation, and Blackstone, Bluestone, Yellowstone, all stone you get the funding from. Right. Then after all the funding, then your dream is getting listed. And then you get listed, you have to constitute an audit committee. You understand? Okay. Right. So which companies? Don't allow the antlers to grow. Antlers not helpful. Okay, right. So listed companies, always applicable. Do they need to constitute an audit committee? Yes. Apart from listed company, every public company having the paid PSC क्या है? Paid up share capital of more than or equal to 10 crore or having the turnover of more than or equal to 100 crore or having in the aggregate, you know this sign? This E I have drawn, aggregate. A sigma aggregate, this is also summation, aggregation, whatever. Okay, right? So it is the aggregate, total, simple. It is the total of LBDD. What is LBDD? Loans, borrowing, debenture, deposits. Loans, borrowing, debenture, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. Swaha. Right. So anyways, okay. Listed companies. Listed companies always. Apart from listed companies, which companies are required to constitute an audit committee? Every public company having paid up share capital of more than or equal to 10 crore or having turnover of more than or equal to 100 crore or having in the aggregate LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. Okay. A private company having a paid up share capital of 20 crore has not constituted an audit committee. Comment. Private company having paid up share capital of 20 crore has not constituted an audit committee of the board of directors. Comment. Should they constitute audit committee? No, it is a private company. So private companies, no need. What does it say? Listed companies and every public company. So private company is not required. Right? So every public company having PSC. PSC, paid up share capital of more than or equal to 10 crore or having the turnover of more than or equal to 100 crore or having in the aggregate LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. So, like what I want to ask you is, every company required to constitute an audit committee? No, we have the applicability of section 177. If you exceed these limits, then you have to constitute an audit committee, right? So, company may have an audit committee or it may not have an audit committee. If it has an audit committee, then audit committee will approve. If it does not have an audit committee, then the board of directors will approve. That is why, what does it say? Other services to be approved by the audit committee or the board of directors, as the case may be. Because every company is not required to constitute audit committee. So if a company is required to constitute audit committee, then audit committee. If not required to constitute audit committee, then the board of directors. So everywhere you will see this, okay? AC or BOD, as the case may be. So audit committee or the board of directors, as the case may be. Okay, anyways, as we are getting into the technicalities, today I told you about cricket terminology, no? So here we are talking about the audit terminology, right? So company may have audit committee or board of directors, so will always be there. You understand? So these audit committee, board of directors, they are called as the TCWG. What is TCWG? It is those charged with governance. Right? Those charged with governance means those who have the power to control the organization, who have the power to take the decision making for the organization. They are referred to as the TCWG. TCWG, very simple language. If I have to understand who are these people, they are the highest level of management in an organization. The highest level of management in an organization. Below the audit committee board of directors, you have the management, right? You have the management, and below the management, you have the employees. Audit committee board of directors, they give the strategic direction to the entity. Okay, we will launch a new product, we will increase the sales price of the product from 30 to 40 rupees. Strategic direction that we will start a new office in Mumbai, we will start a new office in Gulf. So the strategic direction of the entity, that is decided by the TCWG. And now board of directors audit committee, they've decided. What they've decided? We will start a new office in Mumbai. Okay, now who will execute that decision? The decision will be executed by the management with the help of the employees. Right, so TCWG, they give the strategic direction to the entity. Management, they do the execution part. Some companies, please listen to me carefully. Some companies, management and TCWG may be one and the same. Okay, they only decide the strategy, they only do the execution. But the bigger the hierarchy in the organization, the bigger the size of the organization, you have the TCWG. Like say for Tata Group, Ratan Tata. Right? Or is whosoever is the, what do you say, the board of directors of the company, they decide the strategy. But they are not going to execute it. For executing, they have it the management. And under the management, you have the employees. Are you understanding? Okay. If a company, you look at their hierarchy, right? And whosoever is at the top of the pyramid, they are TCWG. Below them, you have the management, and below them you have the employees. So TCWG is also the management only, but only that it is the highest level of the management. And one level below the TCWG, one level below the board of directors, you have the management. Can it happen that in some companies TCWG management is one and the same? Yes, it is possible. So like Infosys, Tata Motors, they will have board of directors audit committee. So that is going to be the TCWG. Below that they have the, what do you say, they could be having the CEO of the company, CFO of the company, vice president of the company, finance manager of the company. That is the management. And then below that they will be having the accounts employee, inventory employees, and all those employees. Those are the employees of the company. So what is the takeaway for you? TCWG means what? Those charged with governance. It is the highest level of management in an organization. They give the strategic direction to the entity. Yes, some companies, management TCWG may be one and the same, or they may be different also. Are you understanding that? Every company, does it need to have board of directors? Yes, but every company, do they need to constitute an audit committee? No, we have the applicability of section 177. So if 177 is applicable, then you have the audit committee. Right, so what does it say? Other services to be rendered by the auditor of the company. Who has to approve these other services? Audit committee or the board of directors, as the case may be. Okay, so now if statutory auditor is to be appointed to do the tax audit, can statutory auditor do tax audit? Yes, but who has to approve it? Audit committee or the board of directors. But what does it say? Other services to be provided by the auditor of the company has to be approved by audit committee or the board of directors. However, it will not include the following services. However, it will not include the following services. What does it say? If I am the auditor of Growth Limited, if I am the auditor of Growth Limited, I cannot provide the following services to 3 companies. Oh my God. So now for the purpose of 141(3)(I, right? Now for the purpose of 141(3)(I, how many companies we have? 3 companies. Which are the 3 companies? Company, holding company, and the subsidiary company. So if I want to do the stat audit of Growth Limited, I want to do the stat audit of Growth Limited, I cannot provide the following services to the company, to Growth Limited, to the holding company of Growth Limited, or to the subsidiary company of Growth Limited. I cannot provide the following services to 3 companies. Which are the 3 companies? Company, holding company, and the subsidiary company. Which services I cannot provide? It says you cannot provide the accounting and bookkeeping services. I told you na, maker checker has to be different. Right, so accounting and bookkeeping services, can I provide? No. Then what does it say? Accounting and bookkeeping, internal audit. Can I do the internal audit? No. These are the prohibited list of services. This is the blacklist. If I have to do the stat audit of a company, can I provide these services to the 3 companies? No, I cannot provide these services. So accounting and bookkeeping and the internal audit. Then you have the design and implementation. So helping them with the design, and after designing also implementation of the financial information system. Design and implementation of the financial information system or the outsourced financial services. They've outsourced some financial work, right? So the outsourced financial services, can these be provided by the auditor of the company? No, he cannot provide these services to the 3 companies, company, holding company, and the subsidiary company. Then you have the investment advisory services and the investment banking services. Investment advisory services and the investment banking services. Very favorite question of ICAI, this one, right? Investment advisory services, investment banking services. Then you have the actuarial services. Do you know actuary? Yes, actuary, you have to write down the 16 papers, and then there is the actuarial work which is used for calculation of retirement benefits, gratuity leave encashment, and also for calculating the claim provision for the insurance company. And you have the, just as chartered accountant is a professional, similarly which you get your degree from ICAI, there is also an Indian Institute of Actuary, right, from where you get your actuarial degree. So it says you cannot provide the actuarial services, you cannot provide the management services or any other kind of services as may be prescribed. Right, so what are the 8 services over here? 2 put together. Accounting and bookkeeping, internal audit, design and implementation of the financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. If I want to do the audit of Growth Limited, I cannot provide the following 9 services to Growth Limited, to holding company of Growth Limited, to subsidiary company of Growth Limited. Are you understanding this? Okay, right. So now CS Sparkle has been appointed to provide actuarial services. Listen to me. CS Sparkle has been appointed to give the actuarial services to the associate of Growth Limited. Can CA Sparkle do the audit of Growth Limited? CA Sparkle has been appointed to do the actuarial services to the associate of Growth Limited. Can CA Sparkle do the audit of Growth Limited? Yes. Why? Because associate allowed. Where it is not allowed? Company, holding company and the subsidiary company. Same question, I just changed one word. Okay, CA Sparkle is providing actuarial services to the subsidiary of Growth Limited. Then CA Sparkle cannot be appointed as an auditor of the Growth Limited. Are you all with me? Yes, are you able to follow what I'm talking about over here? Okay. Right. So what is section 144? Auditor not to render certain services. What does it say? Any other services to be rendered by the auditor of the company should be approved by the audit committee or the board of directors, but it should not include the following services. What it should not include? Accounting and bookkeeping, internal audit. 1, 2, 3, 4. Design and implementation of the financial information system, outsourced financial services. 5, 6. Investment advisory services, investment banking services. 7, 8. Actuarial services, management services. And last one, any other kind of services as may be prescribed. Okay. So now, Audit Committee of Growth Limited, are you listening? Audit Committee of Growth Limited has approved. What they have approved? Okay, I can do the investment advisory. I can do the investment advisory services for the subsidiary of Growth Limited. Am I qualified or disqualified? But Audit Committee has approved. But what does it say? These services can never be provided. Audit Committee has approved providing tax audit of Growth Limited, then that is fine. But Audit Committee, even you cannot approve what is prohibited. Audit Committee, Board of Directors, even you cannot approve what is prohibited. Okay? These 9 services are the prohibited only. Apart from that, other services to be provided have to be approved by the Audit Committee or the Board of Directors. Are you understanding that? Right? So, Audit Committee or the Board of Directors. So, anyways, coming to the last disqualification over there. What is the last disqualification over there? 141(3)(I). What is 141(3)(I)? A person either directly or indirectly is rendering these services under section 144. The 144 services to 3 companies. Which are the 3 companies? Holding company and the subsidiary company, right? So person providing the 144 services to 3 companies, you are disqualified under 141(3)(I). And is 141(3)(I) linked to section 144? Is 141(3)(I) linked to section 144? Yes, and have we just discussed 144? Auditor not to render certain services. Other services to be rendered have to be approved by Audit Committee or Board of Directors, but it cannot include the following services. Which services it cannot include? Accounting and bookkeeping, internal audit, design and implementation of the financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. Are you understanding the disqualifications of the company auditor? Right. So what does it say? A person who is being convicted by a court for an offense involving fraud and a period of 10 years has not elapsed, and a person who directly or indirectly renders any service referred to in section 144 of the company to the company or its holding company or its subsidiary company. Okay, right? So what does it say? Individual or the firm, neither directly or indirectly or through any significant influence or control. And directly, indirectly. So that what does directly, indirectly mean over here? That I am doing the audit of Growth Limited. Can I provide the 144 services to Growth Limited? I am doing the start audit of Growth Limited. Can I provide the 144 services to Growth Limited? No. So another firm where I have significant influence, I tell them you do the 144 services. It says no. And a person who directly or indirectly and renders any services referred to in 144 to the company or its holding company or the subsidiary company. And what is section 144? Auditor not to render certain services. What does it say? Not to be rendered by the auditor. An auditor shall provide only such other services as are approved by the board of directors or the audit committee as the case may be, but which shall not include any of the following services. Are you understanding? So other services to be approved by audit committee or board of directors, but it shall not include the following services, where such services are rendered directly or indirectly to company, holding company or the subsidiary company. What are those? Accounting and bookkeeping, internal audit, then design and implementation of financial information system, outsourced financial services, then investment advisory services, investment banking services, then you have the actuarial services, management services, and any other kind of services as may be prescribed. Are you getting 2, 2, 2, 2, and then any other? Right, kind of services as may be prescribed. Okay, right, so all this put together, is it the disqualifications of the company auditor? A person shall not be eligible for appointment as an auditor of a company if, and then you have A, B, C, right? A, B, C, D, E, F, right? D, E, and then you have the F, and then after that you have the G, H, and I. What is G? CA is in full-time employment elsewhere, right? So G, CA is in full-time employment elsewhere or 20 company audits, then convicted by a court, and then the 144 services. Okay. Now say today I have to be appointed as an auditor of Growth Limited. And today, say today is like say 20th of August 2026, and generally AGM takes place before 30th September. So say today is 20th August, and now today the board shareholders of the company are going to appoint the auditor. Okay, so today should I be holding any share? Yes, what does it say? None of the disqualifications of the company auditor should be attracted on the date of the appointment. None of the disqualification. So say 15th August I was holding the share, but then I came to know, oh, maybe they will appoint me as an auditor. I was holding 2 shares, and that is why what I did, I quickly sold those 2 shares. I quickly sold those 2 shares. So as on the date of appointment, what is my date of appointment? 20th of August. So as on the date of appointment, am I holding any share? No. Before appointment, was I holding? Yes. If not holding, then so no problem. But if holding, but I sell off those shares, then as on the date of appointment, am I holding any share? No. So am I qualified to be appointed as an auditor? Yes. Now 20th August, they appointed me as an auditor. And I'm so happy. Why happy? Appointed, no, as auditor of Growth Limited, telling everyone, I got audit, Growth Limited, 20 audits, full audits I have now, 20 audits with me. You know, I was appointed, so many auditors, they applied, I got the audit, 4 crore audit fee, big money. Okay, so, and I don't know, telling everyone, appointed auditor, happy, happy, out of the happiness, on 21st of August, purchased 1 equity share of Growth Limited. In happiness, crazy things happen, no? Don't lose rationality of mind. And lost rationality of mind, telling Aarti, I appointed, calling everybody, WhatsApp group everywhere, sending, and made poster, appointed as auditor of Growth Limited. But then something, when you're so much on the 10th floor, tap, you fall on the ground floor. And then what you did? Purchased 1 equity share. Now this was disqualification before appointment, but you cleared it, so no problem. As on the date of appointment, there was no disqualification. But now there is a disqualification after the appointment as an auditor. This is the chair of the auditor. This is the chair of the auditor. So if anybody asks, who is the auditor of your company? C. Sparkle. He's the auditor of the company, okay? And now what happened? After the appointment, disqualification attracted. Can I continue to sit on this chair? Can I continue to sit on this chair? Can anybody come and move me from this chair? Government will come? You say, no, I am appointed, 20th August. What? I purchased just 1 share. What is your problem? It says automatic removal by the company law. You'll say, no, nobody came and told me. I did not get any phone call that you are no longer the auditor. And nobody is going to call you. Is everybody going to sit over there and say, oh, when are you going to purchase that one share? And nobody is going to monitor you. So if any of the disqualification is attracted after his appointment, the auditor shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Vacate, vacation, vacancy. All of a sudden, you'll say, oh, you listen about, I'm not telling it in a light manner, I'm telling it in a serious manner, that you say, oh, yesterday morning I saw this person, morning walk he was doing, and then you see all of a sudden there is an obituary which comes, all of a sudden death or something, and working on the gym, and all of a sudden heart failed, collapsed and gone. So like that's what you listen nowadays, no? Like life is so fragile. So anyways, you say, yesterday though he was appointed, what happened today? Today what happened? One share purchased. One share purchased, out. The auditor shall vacate his office, and such vacation shall be deemed to be a casual vacancy. Casual means suddenly. There is a vacancy in the office of the auditor, right? So if any of the disqualification is attracted after his appointment, so that is 141 subsection 4. What is 141 subsection 4? Where a person appointed as an auditor of a company incurs any of the above disqualification. You know above? A, B, C, D, E, F, G, H, I. Any of the disqualifications above, after his appointment, he shall vacate his office as such auditor, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Are you understanding that? No grace day, nothing. Immediate removal. You withdraw money from the bank now, immediately you get message. Immediate removal by company law. The moment you purchase that share, out. You are no longer an auditor of the company. No, then your appointment, there is already a casual vacancy created. So now there is a procedure how to fill the casual vacancy in the appointment of auditor. So that procedure needs to be followed. Yeah, if the company decides, the board of directors, members, if they decide. But this is a very negligent approach of the auditor, so they won't. Yes, clear to everyone? Section 141. What was 141, 1 and 2? A, what was 141, 1 and 2? Qualifications, individual, firm, LLP. That was 141, 1 and 2. 141, 3? Disqualification. 141, 4? Any disqualification attracted after appointment, he shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. And now what we have next over there is we also studied 144, auditor not to render certain services. Are you getting that? Right, auditor not to render certain services. Okay. Right, so let me just open a file over here, just a few correct and incorrect. Right, so a member of the Institute of Chartered Accountant of England and Wales is qualified to be appointed as an auditor of Indian companies. No, what did I tell you? Chartered accountant holding a COP of the ICAI, only if he is a chartered accountant, and a firm where majority of the partners are practicing in India. Therefore, N is disqualified to be appointed as an auditor. And a member of the Institute of Company Secretary of India. Company Secretary? No, it has to be only a chartered accountant. A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. So no company secretary can do company audit. Okay, an undischarged insolvent chartered accountant is not qualified to be appointed as a statutory auditor. You know insolvency? Right, an undischarged insolvent means what? Whose insolvency proceedings have not yet been completed. And the proceedings are still going on. Okay, now just as you have the disqualifications of the auditor, which we study under section 141 subsection 3 of the Companies Act 2013, Companies Act 2013, you have section 8 of the Chartered Accountants Act, है ना? We have Section 8 of the Chartered Accountants Act 1949, and Chartered Accountants Act talks about the disabilities for membership. Okay, when you cannot become a member of the ICAI, and disabilities for membership. So please understand, obviously if you are disabled to be a member only, there is no question of you getting your COP or you being qualified. Right, so what is one of the disability over there? Age less than 21 years. Right, so if you are less than 21 years, your name cannot be entered into the register of members, right? So you cleared your CA final when you are 20 years and 6 months old. It says wait for 6 months. You have to complete 21 years only, then apply to the institute for your membership. You understand that? So this is a disability for membership. So obviously if you cannot become a member, automatically you're disqualified also. You're not qualified to be appointed as an auditor also. Or it says a person of unsound mind. Because how this person know how he'll handle his degree? It says we don't give you membership only. And CA course is capable of moving the soundness of the mind. You understand? So it says no use. You cleared CA but mind became unsound. Lot of sound coming from the mind. It says out. Unsound mind. Are you understanding that? Then it says undischarged insolvent. Undischarged insolvency proceedings are still going on. It says pehle finish that, then become a member of ICAI. Or a discharge insolvent. Ki your insolvency proceedings are completed, but you've not obtained a certificate from the court that your insolvency was caused by misfortune and not any misconduct on your part. So you were insolvent, but now the insolvency proceedings are discharged, you completed, but you have to obtain a certificate from the court saying what? That your insolvency was caused due to misfortune and not any misconduct on your part. Or a person convicted by a court for an offense involving moral turpitude, which is leading to imprisonment or leading to the transportation. Right? Offense involving the moral turpitude. That means you are a part of the Kasab team, Laden team. It says you don't become a part of ICAI team. You continue with your other teams only. And an offense involving the moral turpitude. Yes, moral turpitude, like involved in any type of criminal activities, money laundering activities, or it says you better stay 10 feet away from ICAI. And if we don't take your name only in the register of members, or any other reason for which the executive committee of the council considers the person to be unfit to be a member of the institute. It says you are unfit to be a member of the institute. So anyways, what are these? These are the disabilities for the membership. Obviously, if you cannot become a member only, there is no question of you being qualified. That chartered accountant, you don't get your membership only. So there is no question of COP also. Right? So what was the question right now over there? Undischarged insolvent. Can he be appointed as an auditor of the company? No. Why? Because he won't get his membership only from the institute. Are you understanding? Age less than 21 years. Unsound mind and stands so judged by a competent court. Then undischarged insolvent. Discharge insolvent who's not obtained a certificate. Then offense involving the moral turpitude and any other reasons for executive committee of the ICAI considers the person to be unfit to be a member of the institute. Are you all understanding this? Right. So anyways, let's come back over here. What does it say? Undischarged insolvent is debarred. Debarred samajhte ho? Debarred, not allowed, not allowed to be entered into the register of members. So he cannot continue as a member of the ICAI, thus he is not qualified to be appointed as an auditor. If an LLP is appointed as an auditor of the company, every partner of the LLP shall be authorized to act as an auditor. Every partner of the LLP, only those partners of the LLP who are the chartered accountant shall be authorized to act and sign on behalf of the firm. And only the chartered accountant partners of the LLP, CS, CMA, actuary, architect, engineer, no. Okay, where a firm including an LLP is appointed as an auditor, any partner who is a chartered accountant shall be authorized to act and sign on behalf of the firm. What does it say? Only the, yes, as per section 141(2), where a firm including an LLP is appointed as an auditor, only the partners who are the chartered accountants, right? So not any partner, it says only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm, right? So where a firm including an LLP, any partner, it says not any partner, only the partner who are the chartered accountants. Not any partner, it is only the chartered accountants, yes? Who is a chartered accountant? But that is now not how the drafting of the section is done. It says only the partners who are the chartered accountants. Okay. A chartered accountant holding security of face value of 950 rupees is qualified for appointment as an auditor. No. Single equity share also out. As per the provisions of the Companies Act, a person is disqualified to be appointed as an auditor if he is holding any security of or interest in the company. As the company's CA is holding securities of face value of rupees 950, he is not eligible for appointment. Is he qualified? Yes, even though he is qualified, but he is not eligible. Why? Because he is holding the shares. AP and company is an audit firm having partners ABC. The relative of B is holding securities of face value 2 lakh. In XYZ and company, AB and company is qualified for being appointed as an auditor? No. Any relative exceeding the limit of 1 lakh, the entire firm is disqualified from being appointed. An auditor is considered to lack independence if the partner of the audit firm deals with the shares and securities of the audited entity. Right? Will the auditor be considered to be lack independence? Yes. And also what does 141(3)(d) say? Person or relative will not be, person, partner, relative will not be eligible for appointment as an auditor if he is holding any security of or interest in. Right, so will be disqualified to be appointed as an auditor, and this also comes in the threats of the independence of the auditor. If auditor purchased goods on credit from the company and company allowed auditor a period of credit, this does not disqualify him to be an auditor. This business relationship, provided, what does it say? The indebtedness should not be exceeding rupees 5 lakh. That means what? Okay. Now you have to combine 141(3)(d)(2) and you have to combine 141(3)(e) over here. Okay, I stay in a hotel as a customer, right, in the ordinary course of business, and if outsiders are charged 7,000 rupees per day, even I am charged 7,000 rupees per day. So it is the arm's length price. Okay, is it allowed? Yes, is it a business relationship? No. But now my outstanding bill of the hotel is 8 lakh. Is it allowed under 141(3)(e)? Yes, but what will get attracted is 141(3)(d)(2). Why? Because the indebtedness is exceeding rupees 5 lakh. So though it is, so even your business relationship, you have to ensure that it is within 5 lakh, because though you will be saved under 141(3)(e), you will be caught under 141(3)(d). Are you understanding? So I am staying in a hotel as a customer, ordinary course of business, arm's length price, outstanding bill is 3 lakh. Then no problem. Then not disqualified. Why? Because indebtedness limit is how much? 5 lakh. Are you understanding this, everyone? So you have to check not only for 141(3)(e), but along with that you have to keep in mind the indebtedness limit of 5 lakh, right? You have to keep in mind the indebtedness limit. Okay, right. CAX is the auditor of Parth Limited. He recovers his fees from the company on a progressive basis as and when the work is done without waiting for the completion of the whole job. Thus, he is said to be indebted to the company. And that means, say the audit fee which I have to receive for a particular audit is 20 lakh. Okay, and now say I am doing the audit, say I start my audit on 2nd April and then I finish it on 26th April. But what I tell a client when I sign the audit report and then you give me the audit fee, you may or may not pay. So as and when I finish doing my work, client, you keep on paying me the money. So I finish 25% of my work, you pay me 5 lakh. Another 25% of my work, you give me 5 lakh. Another 25%, 5 lakh. And then finally you give the remaining 5 lakh to me. Okay, so now, say 15 lakh has already been paid by the client to me by say 25th of April. And now I am going to sign the audit report on 26th of April. So am I indebted? Because audit is not yet done. But I have already received fees of 15 lakh. So what does it say? You have received the fees on a progressive basis. You are not, cannot be said to be indebted to the company at any stage. Right? So recovering your fees, rather it's a very good strategy or a good policy to follow to recover your fees on a progressive basis, because later on you don't know, client may not pay or something might go wrong. So as and when you finish so much percentage of your work, that much fees you recover from the client. Will you be considered to be indebted to the client? No, it will not be considered as the indebtedness. So fees recovered on progressive basis, is it indebtedness? No. Fees recovered on progressive basis, is it indebtedness? No, it is not the indebtedness. Then the term relative as defined under the Companies Act means anyone who is closely related to another. No, that's not the definition given over there. What is the definition? Members of HUF, husband and wife, and then father, mother, brother, sister, son, daughter, son's wife and daughter's husband. Director's relative can act as an auditor of the company. Director, his relative, can act as an auditor of the company? No. What do we say? Person whose relative is a director or is in the employment as a director or a KMP cannot be appointed as an auditor. Government companies, you know government company? Bharat Heavy Electricals Limited, Steel Authorities of India Limited, government company. What does it say? Government companies are also to be considered for the ceiling on number of audits. Do you know the ceiling? 20 audits. So when I'm counting that limit of 20, should I also count government companies? Yes. If I'm doing audit of any government company, should it be counted? Yes. Because which are the audits which are not to be counted? Small government company, private companies having paid up share capital of less than 100 crore. But government companies, is it to be counted? Yes, they are to be considered and for the ceiling on the number of the audits. Audit of private companies are to be excluded while calculating ceiling on number of audits. No, only those private companies having paid up share capital of less than 100 crore. Right, Pawan, a practicing CA, is appointed as a tax consultant of ABC Limited, in which his father Singh is the managing director. Now here he is appointed as a tax consultant and not as a statutory auditor or a tax auditor, hence he is not subject to the disqualification provisions. Okay, an auditor appointed under the Companies Act shall provide to the company only such other services as are approved by the company in general meeting. Other services, you remember section 144? Which other services a CA can provide which are approved by the audit committee or the board of directors, as the case may be. Yes, it does not require the approval of the shareholders in the general meeting. Where a person appointed as an auditor of the company incurs any of the disqualification after his appointment, he shall vacate his office as such auditor. Right, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Where a person appointed as an auditor incurs any of the disqualification after his appointment, he will continue as an auditor. No, he cannot continue as an auditor. Right, and X is the auditor of PQ in which one of his relative is having substantial interest. Whether X is qualified to be appointed as an auditor? No, where relative is having substantial interest, you cannot be appointed as an auditor. Right, so those are all the correct and incorrect for section 141 and section 144 over there. And then you have this one. Look over here. Yes, section 177. All public companies having an aggregate outstanding LBDD. You know LBDD? Loans, borrowing, debenture deposits exceeding 100 crore or more shall constitute an audit committee. You remember 10 crore, 100 crore and 50 crore. So here what they have given is 100 crore. What it is? 50 crore. Then audit committee is to be formed by each and every company, and the auditor has no compulsion to attend the meeting of the audit committee. An audit committee is to be constituted by every public company. No, we have the applicability. One, it is to be constituted by listed company. Apart from listed, 10, 100 and 50. An auditor has a right to be heard in the meetings, but however he will not have the right to vote. Right to attend the meeting but does not have the right to vote at such meetings. Okay. Right, so huge list of correct and incorrect. So this book is a wonderful culmination of all the provisions which we have. Right, so one question is the entire disqualifications of company auditor. Mr. A, a chartered accountant, has been appointed as an auditor in the AGM, which assignment he accepted. Subsequently, in Jan 2017, he joined Mr. B, another CA, who is the manager finance of Lakshman Limited, as a partner. right? So he accepted the audit. Then he joined another person as a partner, but that other person who joined as a partner is an officer employee of the company. Any one partner disqualified, the entire firm is disqualified, right? So what does it say? 141(3)(c), a person who is a partner or who's in the employment of an officer or employee of the company. So what does it say? Joined as a partner, deemed to have vacated his office as an auditor, vacate his office as an auditor as per 141(4). Ram and Hanuman Associates Chartered Accountant have been appointed as a statutory auditors of Krishna Limited. Mr. Hanuman holds 100 equity shares of Shiva Limited, a subsidiary company of Krishna Limited. Right? So one of the partner, Ram and Hanuman, one partner is holding 100 equity shares of a subsidiary company of Krishna Limited. No. Yes, person, partner, 0 equity share in any of the 5 companies, and here 100 equity shares of the subsidiary company. So first what you write down, see over here, as per section 141(3)(d)(1) of the Companies Act, read with rule 10 of the Company Audit and Auditor Rule 2014. Then second part of the sentence, a person shall not be eligible for appointment as an auditor of a company who or his relative or partner is holding any security of or interest in the 5 companies, right? In the 5 companies. However, relative may hold the security or interest of the face value not exceeding rupees 1 lakh. Then also as per section 141(4), if any of the disqualification is attracted after appointment, he shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the given case, and therefore the firm would be disqualified to be appointed as an auditor, which is the holding company, because one of the partner is holding the equity shares of the subsidiary company. Then RGSN Company, a firm of CA, has 3 partners, R, G and S. The firm is allotted the audit of BY Limited. Our partner in the firm subsequently holds 100 shares. So partner holding 100 shares, single equity share, disqualified to be appointed as an auditor, is not eligible to continue as the auditor. The firm shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor, right? So all this is regarding the shareholding. And then after that, goods on credit, right? Then the business relationship, commercial transactions for the, right? Read this one, question number 11. ABC and Company is an audit firm having partners A, B, C, are holding appointments of 4, 6 and 10 companies. Provide the maximum number of audits remaining in the name of ABC. So it's not given that any one of them is in full-time employment elsewhere. So assuming 20 audits each one. So 60 audits, 4 plus 6, 10, 10 plus 10, 20. So 60, 20. So 40 more audits they can accept. Are you getting? And current total, how many audits they can accept? 60. Out of that, currently they are doing 20. So more 40 audits. Okay. Provide the maximum number of audits remaining in the name of the individual partners. 16, 14 and 10. 20 minus 4, 20 minus 6, 20 minus 10. Is it right? Okay. Then can ABC and Company accept the appointment as an auditor in 60 private companies having paid up share capital of less than 100 crore? 2 small companies and 1 dormant company? Yes, because it is not to be counted in the ceiling limit of the 20 audits. Would your answer be different if out of these 60 private companies, 45 companies are having paid up share capital of 110 crore each? Then out of those 45, you'll have to select any 40. Then out of the 45, you need to select any 40. Are you understanding that, everyone? Right? So those are the questions. Okay, ASD, a firm has 3 partners. The firm is already doing the audit of the 45 companies. The firm is offered the audit of the 20 public companies. Advise how many audits they can accept. What does it say? They can do the audit of only more 15 public companies only, which is within the limits of 141(3)(g. Right, which is within the limit of 141(3)(g. Harry Limited appointed a CA Lakshman as an auditor of the company for a term of 5 years. Further, the company offered him the services of actuary, which were also approved by the board of directors. What do we say? Other services can be provided they are approved by audit committee board, but it cannot include the following services. So actuarial services not allowed, prescribed services not to be rendered, right? And he was offered additional services. CL Lakshman is advised not to accept the services, as these services are specifically notified in the services not to be rendered by him as an auditor as per section 144 of the Companies Act. Are you getting that? Right. NM, who is rendering the management consultancy services, wants to accept the offer letter for appointment as an auditor of the company. Right. So what do we say? Management services, actuarial services. So if you're providing management services, can you do the audit? See, can I do management services? Yes, but if I do management services, I cannot do stat audit. If I'm doing stat audit, no management services, one of the two. And it says prohibited services. To whom they are prohibited? Statutory auditor, if you are the statutory auditor of the company. ABC appointed CA Prem as an auditor for the current year. Further, the company offered him the services of investment banking, rendering of outsourced financial services and management services, which was also approved by the Board of Directors. State whether these services is the auditor is restrained from and advise accordingly. Right, then again a question asked 3 times in your exams. A person shall not be eligible for appointment as an auditor if he provides the consulting specialized services, right? So consulting specialized services, again here the actuarial services, right? So all this is in order to ensure the independence of, yes, the independence of the auditor. Section 144, auditor not to render certain services. And it will also lead to equitable distribution of work. Now, see, one, it will ensure the independence of the auditor, because one CA is not providing many services to the same client. And second, why you want to get all work done from one CA only? There are so many other chartered accountants, no? So many other CA firms. So you can get this consultancy work, investment advisory services, design and implementation of financial information system for another CA firm. Can you get it done from another CA firm? Yes, it says don't get it done from the firm who is your statutory auditor. Right, clear to everyone? So that completes our discussion of section 141 and section 144. Now coming to section 139, which is regarding the appointment. Before that, if anybody of you want to write down anything from this, you can just quickly note it down. You are already writing, but in case if you've missed out any part anywhere, you can just update. I know. Maybe that battery is only dim. I am wondering how come you guys have not said it so far. Has it been the same for all the classes? I'll tell them. Write down. Let me see. At least 2 pages written in your book or no? Ah, thank God. From morning at least some work you've done. Oh my God, that's a great job. Write darker, no? Such light pen. Arey wow. Good job. Where are the 9 disqualifications? Fit हो गया? 9 क्यों लिखा? GHI लिखना है ना? A, B, C, D, E, F, GHI, क्योंकि वैसा लॉ में दिया है ना? हिंदी नहीं पता है तो अच्छा है. Person in the firm. The entire firm is disqual. That particular person cannot do. Yeah. The other partners of the firm, they can do. This particular, they keep him on the bench. Then you stop providing management and then you do audit, that's fine. What you are writing? Aggregate. Yes. Only one color pen you have? एक ही पेन है? Only one pen? Blue color, green, orange, yellow, red, pink, purple. Oh, all color, 10 color. With highlighter and sticky notes. Full stationery. It's so boring to read like this. Colorful, na? Bring some stationery, tomorrow. No, start auditor. एक एक ही बुक है. Right. Now what we have seen is who can be appointed, who is qualified, who is disqualified to be appointed as an auditor. Now whosoever can be appointed, how he can be appointed we will see now. And we will now study regarding the appointment of the company auditor, right? Section 139 of the company law, which is regarding the appointment of the company auditor. Who can be appointed? Yes, we've already seen, and how you appoint an auditor of the company is now we are going to study that. Okay, right. So now, yes, you have to listen to me carefully, right? How to appoint, yes, or who will appoint the auditor of the company? We need to discuss that under 2 heads and 3 heads. What are the 2 heads and 3 heads I am talking about? Appointment of the company auditor in case of the other than government company and in case of the government company. Okay, who will appoint the auditor in case of the other than government company like Tata Motors, Infosys, and who will appoint the auditor in case of a government company like BHEL, SAIL or so. Okay, right, 2 heads, and then after that we have the 3 heads, right? Chart, draw it later, right? So because you may not get the judgment of, you know, qualifications, disqualifications, you would have written them one after the other also. But here we have to draw a chart. Okay, right. So now 3 heads. What are the 3 heads? The appointment of the subsequent auditor, the appointment of the first auditor, and the appointment of the auditor in case of the casual vacancy. And so subsequent auditor, first auditor, casual vacancy. Did you get the 2 heads and 3 heads? 2 head kya hai? Other than government company, and 3 heads, what are those? Subsequent auditor, first auditor, and the casual vacancy auditor. For first auditor and casual vacancy auditor, I will write in case of other than government company, BOD. You understand BOD? Board of directors, and then members. Members means shareholder, right? Shareholders. And in case of government company, I am writing over there C and AG. Who is C and AG? C and AG. It is the comptroller. Comptroller and Auditor General of India. C and AG. Comptroller. In private companies, you have controller. In government companies, you have comptroller. For government company, comptroller. Like comptroller, like what is chartered? You're going to become chartered accountant. What is chartered? Huh? Yeah. Accountant. एक तो accountant होता है, and then there is chartered accountant. Special accountant. So comptroller is also special. Define the chartered. They say it took a chartered flight to go from one place to another. Special, no? You took a special flight. So not that 200 people are sitting in the flight. Only you with your bouncers and Z security. You are in the flight. So chartered flight. So chartered accountant. Like that, comptroller and Auditor General of India. Okay, right. Array. Right, then CNAG, BOD and the members. Okay, right. Now see over here, look at the format. Appointment of the company auditor, other than government company, subsequent auditor, first auditor, casual vacancy auditor. For first auditor, casual vacancy, I have written over there BOD, members in case of other than government company, and in case of government company, CNAG, BOD and members. Are you understanding the format so far? Okay, we'll update this chart. Yes, we'll update this chart later on. But now we'll try to discuss it one by one and then try to culminate or incorporate it into this chart. There's nobody, the staff was there, no? They don't eat lunch before us. No, Arey, this projector light lamp is very dim. Bright light. How depreciation is done of projector lamp, you know? Based on number of hours. Electronic, but then how you determine the estimated useful life is like, you know, it can work, the lamp has a life of 40,000 hours. So every day, how many hours you're going to use it on an average, so for the year and accordingly. Because its life is in terms of number of hours. And I'm saying, just to get an idea, estimated useful life. Everything is an estimation, no? Enough, no, now. Enough. Enough. Better, not the best, but better. Artificial intelligence. But you have to agree it's better than before. बहुत अच्छा. Enough. In break you do more adjustment. Get down. Okay, right. So this is the format that we have drawn. Right. So listen to me. Okay. Break. Right. So now we have to discuss these different provisions regarding the appointment of the company auditor. Right? So one, regularly in the routine course, like company is there for hundreds of years. So generally how an auditor of a company is appointed, that is subsequent auditor. Right? Then first time after the company is incorporated, registration of the company is done, how is the first auditor of the company appointed? Right? So after the incorporation of the company. And then you appointed an auditor of the company, but I just talked to you about 141(4), na? Disqualification attracted after appointment. And he vacates his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Or you appointed the auditor of the company today and tomorrow he died. A casual vacancy, na? Now you can't make the mummy or of that chartered accountant sit over there. You understand? No. So there is a casual vacancy in the office of the auditor. Or today you appointed, again. What? Tomorrow morning, ego problem. Resigned. No. I thought I will get fees of 4 crore. They are giving me only 3 crore 99 lakh. Out. Out. Not doing audit. Whimsical. Hai na? Okay, right. So what is it? Casual vacancy in the office of the auditor. Right. So these are the three variations for the appointment of the auditor. What are the three variations? Subsequent auditor, first auditor, and the casual vacancy. And then you have the other than government company and the government company. Okay, so I'll call it as OGC and GC. You understand OGC and GC? What you understand? Other than a government company, and in case of the government company. Okay. Now, government company and other than government company. Right, what does it say? Today the company was incorporated, right? Say today is 20th of March. Today the company was incorporated. So now from today the company was incorporated. So from today within the 30 days, first 30 days from the date of the registration of the company, other than government company, the first auditor can be appointed by the board of directors. Right, so within 30 days from the date of registration of the company, the first auditor can be appointed by the board of directors. Okay. However, what does it say? The board of directors do not appoint. The board of directors fail to appoint within the 30 days. Then what does it say? The members will appoint the first auditor within 90 days at the EGM. And then the members will appoint the first auditor within the 90 days at the EGM. And this auditor, he will hold office till the conclusion of the first AGM because he is the first auditor. So from the date of registration of the company, within 30 days, first power given to the board of directors that you can appoint the first auditor of the company within 30 days from the date of registration of the company. However, they don't appoint within 30 days. Then the members can appoint within 90 days at the EGM. And then such auditor appointed will hold audit office till the conclusion of the first AGM. Okay. Now, government company. Now, the first power. So, today government company got incorporated. So, from today, within 30 days, the first power to appoint the first auditor in case of the, yes, we are talking about the first auditor. The first auditor in case of the government company has been given to the C and AG. Okay, within 60 days from the date of incorporation of the company, 60 days, the C and AG can appoint the first auditor. However, if C and AG fails to appoint within 60 days, if C and AG fails to appoint the first auditor within 60 days from the date of registration of the company, then the board of directors can appoint within the next 30 days. Then the board of directors can appoint within the next 30 days. This next word is not there in case of the other than government company members. There it simply says 90 days. So effectively it would be 60 days because 30 days of the board of directors and then 60 days. Why? Because they have not used the word next over there. You know, for other than government company. But for government company, what does it say? First power given to the C and AG. They can appoint within 60 days from the date of C and AG. They can appoint within 60 days from the date of registration of the company. If C and AG fails to appoint within the 60 days, then the board of directors can appoint within the next 30 days. And if board of directors fail to appoint within the next 30 days, then could be appointed by the members within the next 60 days. Then can be appointed by the members within the next 60 days. Right? So, are you getting this over there? Right, so when does the power of the board come to appoint the first auditor in case of government company? After CNAG ka 60 days are over. So say government company incorporated today and within 15 days, board of directors appointed the first auditor. Is it okay? Today government company incorporated, within 15 days, board of directors appointed the first auditor. No. For first 60 days, who has the power? C and AG. Then if within those 60 days C and AG does not appoint, then within the next 30 days the board of directors can appoint. And if the board does not appoint within the next 30 days, then the members can appoint within the next 60 days. The power of the board of directors is activated only after the C and AG ka 60 days are over. The power of the members is activated only when the 30 days of the board of directors are over. Are you understanding that over here? Right. So other than government company and the government company. Right. So I'll just draw the chart again. No need for you to draw it so many times. You can copy that one chart towards the end. So appointment of the company auditor other than government company and the government company. You have the appointment of the first auditor and the appointment of the auditor in case of the casual vacancy, and then you have the BOD and the members, and here you have the C and AG, BOD and the members. Are you remembering this one? This format over here? Okay. Right. Now what is the number? Provided you draw this format. What is this format? You first write down the OGC, and then you write down the GC, and then you first write down the first auditor, and then you write down the casual vacancy. What is the number? 396363. Okay. Now 39636 is for the first auditor, right? And 3 is for the casual vacancy. I'll come to 3. 3 I'm yet to discuss with you. But right now what it is? 39636. And then 30, 90, 60, 30, 60. Right? The first auditor can be appointed by the board of directors within 30 days from the date of registration. Right? If not appointed by the board, then members can appoint within 90 days at the EGM. CNAG, they can appoint the first auditor of the government company within 60 days from the date of the registration. However, if CNAG fails to appoint, then board can appoint within the next 30 days. And what if board fails to appoint within the next 30 days? Then the members can appoint within the next 60 days. Are you understanding this, everyone? And the auditor so appointed, what is his tenure of office? He will hold office till the conclusion of the first AGM. He will hold office till the conclusion of the first AGM. Are you understanding this, everyone? 30, 90, 60, 30, 60. Is it clear? Other than government company, first auditor. And then you have the casual vacancy. Right? Now what next provision we have over there is in case of the casual vacancy. Again, casual vacancy, listen to me. You have in case of other than government company, OGC, and you have it in case of the government company. Right? Why there could be a casual vacancy in the office of the auditor? Disqualified, or he died, or he resigned. So that is why there is a casual vacancy in the office of the auditor. So now, other than government company, please listen to me carefully. You have to check whether the casual vacancy is due to reasons other than resignation, or whether the casual vacancy is due to the resignation. Whether the casual vacancy is for reasons other than the resignation, that is he died or he was disqualified. He purchased one equity share, that is why there is a casual vacancy. Or second, he resigned, that is why there is a casual vacancy. Okay. Now, in both cases, what does it say? If there is a casual vacancy, are you all listening to me? And now, if there is a casual vacancy in the office of the auditor, what does it say? Any casual vacancy in the office of the auditor can be filled by the board of directors within 30 days from the date of the casual vacancy. Within 30 days from the date of the casual vacancy, it is to be filled by the board of directors. Here also, board of directors to fill the casual vacancy within 30 days of the date of the casual vacancy. And the auditor so appointed, he will hold office till the conclusion of the next AGM. He will hold office till the conclusion of the next AGM. And due to resignation, who has filled the casual vacancy? The board of directors. Casual vacancy other than government company, due to resignation, who has filled it? Board of directors within 30 days from the date of the casual vacancy. Now, because it is due to resignation, after it has been filled by the board of directors within 30 days from the date of the casual vacancy, it shall also be approved by the members at the EGM within 3 months of the recommendation of the board. Within 3 months of the recommendation of the board of directors. Right? And then the auditor so appointed will hold office till the conclusion of the next AGM. Right? Next AGM. Like so, let me give an example and then I'll come to this chart again. Okay, today the auditor of the company died. So today there was a casual vacancy. This reason is what? Other than resignation. Are you understanding that? He died today. So now from today within 30 days, the casual vacancy is to be filled by the board of directors. I am talking about the OGC, other than government company, and the auditor so appointed, he will hold office till the conclusion of the next AGM, right? So board of directors, they will fill the casual vacancy. However, if the board of, what does it say? If the casual vacancy is due to the resignation of the members, if it is due to the resignation of the members. So now today the auditor of the company resigned. So there is again a casual vacancy. So from today, within 30 days, the board of directors will fill the casual vacancy, and say they fill the casual vacancy on the 15th day. Example, within 30 days they have to fill. Say they filled it on 15th day. So from the 15th day, within 3 months of the recommendation of the board, it has to be approved by the members at the EGM. Do you think there might be some logic behind this? Like, you know, if he died, it says board of directors you appoint, at AGM we will see, and till the conclusion of the next AGM. But if there is a resignation, board of directors, you fill the vacancy, but can that auditor directly be appointed? No, it has to be approved by the shareholders at the EGM within 3 months. Why? Because the matter is serious. There is a resignation of the company auditor. The shareholders would like to look into, okay, why did the auditor of the company resign, and which another auditor is now being appointed by the company. That is why approval of shareholders is required in case of casual vacancy due to resignation. However, it is not required in case of the casual vacancy other than resignation. So temporarily there is a vacancy in the office of the auditor now. So it says BOD you appoint, when we come at AGM we will see. Normal case. But if it is due to resignation, it says BOD you appoint, within 3 months we will approve. Only then the appointment will take place. So, you know, members' intervention is required when the casual vacancy is due to resignation, but not required when the casual vacancy is other than the resignation. Are you understanding that? This is in case of the OGC. And this is in case of the OGC. And in case of the GC, government company, what does it say? Any casual vacancy. Here there is no demarcation of other than resignation and due to resignation. Here what does it say? Any casual vacancy has to be filled by the C and AG within 30 days from the date of the casual vacancy. So if there is a casual vacancy, it has to be filled by the C and AG. So today auditor resigned, or today auditor died. From today, C and AG within 30 days you have to fill the casual vacancy. However, and then if C and AG fails to fill the casual vacancy, if C and AG fails to fill the casual vacancy, then the board of directors can fill the casual vacancy within the next 30 days, right? Then the board of directors have to fill the casual vacancy within the next 30 days. And what if the board does not fill the casual vacancy within the next 30 days? It does not give rise to the power of the members. Here it only says C and AG fill casual vacancy. If not C and AG, then BOD. And if BOD also does not fill the casual vacancy, it's a contravention of the provision of company law. And you've not complied with the requirement of the company law. That means now government company, there is a casual vacancy. So today there is a casual vacancy and a date of the casual vacancy. From today within 30 days, the CNAG can fill the casual vacancy. If CNAG fails to fill the casual vacancy, then it can be filled by the board of directors within the next 30 days. And if the board fails to fill, nothing. There is no power of the members over here. And then the auditor so appointed, he will hold office till the conclusion of the next AGM, right? Till the conclusion of the next AGM. Okay, right? So what we have written, 30, 90, 60, 30, 60, right? 30, 90, 60, 30, 60. And in case of the casual vacancy, we only have 3 over there, right? In case of the casual vacancy, we only have the 3 over there. What is the 3 over there? Right? 33, 30, 30. Right? 30, 3, 30, 30. So what does it say? Within 30 days from the date of the casual vacancy, it is to be filled by the board of directors. However, it is to be approved by the members at the EGM within 3 months of the recommendation of the board. If the casual vacancy is due to the resignation. Are you getting that? And in case of government company, to be filled in by the CNAG within 30 days from the date of the casual vacancy. If CNAG fails to fill, then the board of directors need to fill it within the next 30 days. And what if board does not fill? It does not give rise to the power of the members. And the auditor so appointed, he will hold office till the conclusion of the next AGM. Right? And the auditor so appointed will hold the office till the conclusion of the next AGM. Yes, so now what does it say? 30, 3, 30, 30. So 30, 90, 60, 30, 60. 39636. That is for the first auditor. And casual vacancy is always 3. Am I right? Casual vacancy is always 3. 30, 3, 30, 30. 30, 3, 30, 30. 33, 30, 30. Yes, within 3 months at EGM, this recommendation due to recommend, whatever the recommended of the board of directors, if it is due to the resignation, right? And within 30 days, and you're within the next 30 days. Is it clear to all of you? Then 147, punishment for non-compliance. We said na section 139 to 146 agar nahi follow hua, so then that is non-compliance of the provisions of company law. Let's try making the chart one more time and then one more time. 2 more times we'll try making the chart. Okay, right. So what is it that we are discussing right now is the appointment of the auditor for OGC and GC, and then first auditor and casual vacancy auditor, and then what we have is the BOD and the members, and then C and AG, BOD and the members. Am I right? Right? And then what is the formula we have? Array, what is the formula? 396363. Right? So 39636 and then 3333 anyways. 39636 and then casual vacancy is always 3333 and then 30, 90, 60, 30, 60, 33, 30, 30. But this number will work only if you first write down OGC, then you write GC, then you write first auditor, then casual vacancy. You say, ma'am, hatke, I am different. I will first write government company, then I will write other than government company, then I will first write casual vacancy, then first auditor, full murder of the number, and then they are saying, ma'am, number not working. Arey, how it will work? Number will work, terms and conditions apply. OGC, GC, first auditor, casual vacancy, BOD, member, CNAG, BOD, member. Are you able to visualize? Yes. What you are visualizing? What you visualize? How they visualize? Like this, eyes half here, half there, like this. What you visualize? Section 139, appointment of the company auditor other than government company. First auditor, casual vacancy auditor, then board of directors members, C and AG, board of directors members. 30, 90, 60, 30, 60. 30, 90, 60, 30, 60. 30, 90, 60, 30, 60. Is it right? 30, 90, 60, 30, 60. 33, 30, 30. 33, 30, 30. Is it clear to all of you? Right? The appointment of the first auditor and the appointment of the auditor in case of the casual vacancy. Okay. Right? Government company. Acha. Government company, what is the definition? When would you say? Ah, yes, not less than 51% of the paid up share capital is held by central government, state government, partly by central or the state government, or which is a subsidiary of a government company. That is the definition of the government company. Government company, what does it say? In which not less than 51% of the paid up share capital is held by the central government, state government, partly by central or state government, or which is a subsidiary of a government company. Okay, right? So Bharat Heavy Electricals Limited, is it a government company? Yes. Steel Authorities of India Limited, is it a government company? Okay, yes. Okay, now say, just for example, I'm saying there is a company, TAIL Limited. Okay, and in this TAIL Limited, BHEL is holding 30% and central government is holding 30%. Is TAIL a government company? BHEL is holding 30%, central government is holding 30%. Say there is another company, FAIL. In FAIL, BHEL is holding 30%, SAIL is holding 30%. Is FAIL a government company? +30, 60. Huh? Partly by central government or the state government, or which is a subsidiary of. Subsidiary to not less than 51%. Okay, so your BHEL 30%, central government 30%. FAIL is holding how much? BHEL in FAIL, SAIL 30% and BHEL 30%. 30, 30, 60. Are these government companies? Are these government companies? No. But do they look like government companies only? Almost directly or indirectly types. So these are called as the DGCs, the deemed government companies. And in case of the deemed government companies also, these provisions regarding the appointment of the auditor apply. In case of the deemed government companies also, these provisions regarding the appointment of the auditor apply. See, like over here you see, in case of a government company, had they only wanted to mention government company, they would have stopped over here. But what do they say? Or in any other company owned or controlled directly or indirectly by the central government, state government, or partly by the central government, partly by one or more state government, then the CNAG. Right, so this green part over here, what does it say? This green part over here is for the DGC. What is DGC? The deemed government company. Because government company, so we know, BHEL and SAIL in my example are the government company. But what about TAIL and FAIL? Right, they are coming under the criteria of the deemed government company. So the provisions regarding the appointment of the company auditor. So the provisions regarding the appointment of the company auditor, you will not only apply them to the government companies, you will also apply them to the deemed government companies. Okay, right. So now let's come to the subsequent auditor. So first let us update it in the chart over here. Right, so this is the main chart that we are preparing. Right, so what is the formula? 396363. So 3963633333 dash. Right, and then 30, 90, 60, 30, 60, 33, 30, 30. Is it right? And then the first auditor in case of OGC will be appointed by the board of directors within 30 days from the date of the registration. However, if BOD does not appoint, then the members will appoint within 90 days at the EGM. Right? Government company, first power given to the C and AG, they will appoint the first auditor within 60 days from the date of registration. However, if CNAG fails to appoint, then the BOD will appoint within the next 30 days. And if CNAG board of directors fail to appoint, then the members will appoint within the next 60 days. And the auditor so appointed, he will hold office till the conclusion of the first AGM, right? First AGM. And in case of the casual vacancy, what does it say? Casual vacancy to be filled in by the board of directors within 30 days of the date of the casual vacancy. However, if the casual vacancy is due to the resignation of the auditor, then it has to be approved by the members within 3 months of the recommendation of the board. And the auditor so appointed, he will hold office till the conclusion of the next AGM. Right? And CNAG, in case of all casual vacancies for the government company, within 30 days from the date of the casual vacancy. And what does it say? If CNAG fails to fill, then will be filled by the board of directors within the next 30 days. Right? Clear to all of you? 30, 90, 60, 30, 60, 30, 3, 30, 30. First is OGC, then is GC. Other than government company, then government company. Okay. Now let us talk about the subsequent auditor. Are you all with me? Yes. So now let us talk about the appointment of the subsequent auditor. What does it say? Subsequent auditor. That is first auditor after the company is incorporated. Then after that the casual vacancy, all of a sudden if there is a vacancy in the office of the auditor. But routine course, normally, for every year, right, who appoints the auditor of the company? So it says in case of a government company, the auditor is appointed by the C&AG, the Comptroller and Auditor General of India, within 180 days from the commencement of the financial year. Within 180 days from the commencement of the financial year. And the auditor so appointed, what is the tenure of his office? He will hold office till the conclusion of the AGM. Right? So auditor is not appointed as on a particular date, as on a particular time. Right? He is appointed from AGM to AGM. So from the within 180 days from the commencement of the financial year, until when will he hold office? Till the conclusion of the AGM. Right, till the conclusion of the AGM. So government company, who has the power to appoint the auditor? The C&AG, the Comptroller and the Auditor General of India. They have the power to appoint the auditor in case of the government company. Are you understanding that? Okay. Now in case of other than government company, who will appoint the subsequent auditor? Now in case of the other than government company, who will appoint the subsequent auditor? So who will generally, who has the power to appoint the auditor of the company? The members of the company. Right? The members, the shareholders of the company. Only in case of first auditor, they said board, okay, you appoint. Or casual vacancy, they say board, you appoint. But the auditor, to whom does he have to report to? He has to report to the members, shareholders. So obviously, who has the power to appoint the auditor of the company? The members of the company. And say the members want to appoint PwC. And then say members passed an ordinary resolution in the general meeting. And members passed an ordinary resolution in the general meeting that we hereby resolve that PwC has been appointed as the auditors of the company. And then they send the letter of appointment to PwC. The company secretary sends the letter of appointment to PwC that our shareholders have selected you and appointed you as the auditor of the company. Then PwC says, Arey, you should have asked me. I had the limit of 20 and 20 limit is over. I cannot do this audit. I am holding the shares of your company. Why you appointed me as an auditor? So then what will happen? The appointment will be void ab initio and not effective from the beginning itself. Right? So to avoid such type of a situation, what does it say? Before the appointment of the auditor. Before you want to appoint, the members want to appoint PwC as the auditor of the company, it says a written consent certificate is to be obtained from the auditor. A written consent certificate is to be obtained from the auditor. Okay, the auditor is not disqualified. He is eligible to be appointed. The appointment would be within the limits. Any orders which are proceeding, any pending orders or proceeding against the auditor. Right? So the auditor has to give his written consent certificate. Okay, shareholders, go ahead and appoint us as the auditor. We are not disqualified. We are eligible. That is, the appointment is within the limits or so. So before the appointment, you will send a letter to the auditor that at our forthcoming AGM, we propose to appoint you as an auditor. And then after the written consent certificate is received from the auditor, then the auditor is appointed by the members at the general meeting. Right? Then the members of the company will appoint the auditor at the annual general meeting, and the auditor so appointed. So who appoints the subsequent auditor? The members. But before the appointment, the written consent certificate has to be obtained from the auditor. And after the written consent certificate, notice of AGM is sent, and then the auditor is appointed. Then what does it say? The auditor so appointed by the members, he will hold office. So up to first AGM, how you appointed auditor? Up to first AGM, look down. Up to first AGM, first auditor, board of directors or members, they appointed. So up to first AGM, you had your first auditor, and now you have the subsequent auditor. So what does it say? The auditor appointed by the members will hold office from the conclusion of the first AGM till the conclusion of the sixth AGM, and thereafter till the conclusion of every sixth AGM. Right? So auditor of a company is appointed from the first AGM to the sixth AGM, and thereafter till the conclusion of every sixth AGM. Right? So this first AGM to sixth AGM is where we are talking about section 139 subsection 2, which is regarding the rotation of the company auditor. Which is regarding the rotation of the company auditor. Okay, again, let us look into the 1956 law and the 2013 law. Okay, 1956 law, Companies Act 1956, what does it say? The members will appoint the auditor of the company, who will hold office from the conclusion of that AGM till the conclusion of the next AGM. So auditor was appointed from AGM to AGM. This AGM till the conclusion of the next AGM. Today, how the auditor of the company is appointed? From the conclusion of the first AGM till the conclusion of the sixth AGM. Thereafter till the conclusion of every sixth AGM. Okay, like Companies Act 1956, there was no need to change the auditors of the company. Like this Rajendra and company, they were one of the joint auditors. You understand? Joint auditor, more than one CA firm doing the audit of a company. And so like Deloitte was also the audit of Reliance, but also one of the auditor was Rajendra and company. And this Rajendra and company had been doing the audit of Reliance Industries for last 35 years. Because there was no requirement, okay, one auditor, he cannot do the audit for more than any number of years, no such requirement. So can same auditor do the audit of the company for 100 years also? Yes. So now see, if same auditor is doing the audit for 35 years or 100 years or so, obviously will he become too familiar with the company? Will he, a long time back he had understood the company, and he had come to know their organization structure and their internal control. Now he says what, same company. So he does not look at it from scratch. And same team members going for the audit also for 30 years and 40 years over there. Don't you think the independence of the auditor could be affected? And that is why Company Law 2013 got in a provision that same auditor, you cannot do the audit of a company for a period of more than 5 years. Okay, now are these provisions applicable to all companies? Does every company need to rotate its auditor? No, we have the applicability of section 139(2). So what is the first applicability that we studied today? Array, what was the first applicability we studied today? Audit committee, section 177. Now we are studying applicability of section 139 too. Okay, which companies are required to rotate their auditor? Right, so what did I tell you? Whenever a list of applicability is being made. First one, white elephant. Then a first one to come and stand in the list is what? Listed companies, right? So listed companies, do they always need to rotate their auditor? Yes. Then apart from listed companies, you have the unlisted public companies having paid up share capital of more than or equal to 10 crore. Unlisted public companies having paid up share capital of more than or equal to 10 crore, or all the private companies having paid up share capital of more than or equal to 50 crore. All the private companies having paid up share capital of more than or equal to 50 crore, or all companies having the borrowings or deposits of more than or equal to 50 crore. So 10, 50, 50. Array, listen to me. Listed companies, always they need to rotate their auditor. Unlisted public companies, paid up share capital of more than or equal to 10 crore. All private companies having paid up share capital of more than or equal to 50 crore. And all companies having the borrowings or deposits of more than or equal to 50 crore. Are you understanding? So say A Limited, unlisted company. A Limited is an unlisted company having paid up share capital of 7 crore, having borrowings from banks, financial institutions of 52 crore. Are rotation provisions applicable? A Limited, unlisted company. Paid up share capital 7 crore. Borrowings 52 crore. Rotation provisions, are they applicable to A Limited? Why? All companies having borrowings or deposits of more than or equal to 50 crore. So though the paid up share capital is less than 10 crore, but still the borrowings and deposits are more than or equal to 50 crore. So is rotation provision applicable? Yes. Say had the borrowings been 40 crore, then do they need to rotate their auditor? No. Then can the same auditor continue for 100 years? Yes. Then can the same auditor continue for 100 years? Yes. Then rotation provisions are not applicable. Okay. But if rotation provisions are applicable, are you all with me? If rotation provisions are applicable, then what does it say? You cannot appoint an individual. You cannot appoint an individual. Can you appoint an individual to do the audit as such? Individual, today first point, qualifications of company auditor. Individual, CA with COP of ICAI. Right? You cannot appoint an individual for more than one term of 5 consecutive years. You cannot appoint an individual for more than one term of 5 consecutive years. And if it's a firm, you cannot appoint the firm for more than 2 terms of 5 consecutive years. Right? You cannot appoint the firm for more than 2 terms of 5 consecutive years. So individual, you cannot appoint for more than one term of 5 consecutive years, and firm you cannot appoint for more than 2 terms of 5 consecutive years. Okay. Right, so we have Growth Limited. Let's say Growth Limited is a listed company. So rotation provision applicable? Array, Growth Limited listed company. Rotation provisions, are they applicable? Yes, and say they are appointing C.S. Sparkle. So now for how many years can they appoint C.S. Sparkle? 5 years, one term of 5 consecutive years. Say they are appointing ABC and Company Chartered Accountants. Then 2 terms of 5 consecutive years. That means they can appoint the firm for 10 years. I know. So one firm maximum for how much time they can do the audit of a company? 10 years, to whom rotation provisions are applicable. An individual not for more than one term of the 5 consecutive years. Okay, so now 2026, C.A. Sparkle was appointed as the auditor. 2026, C.A. Sparkle was appointed as the auditor. So conclusion of the first AGM. Am I right? This is the conclusion of the first AGM. Then second, right, third, fourth, fifth, and sixth AGM, right? So till the conclusion of the sixth AGM. So that is one term of the 5 consecutive years. Then after, so now this up to 5 years, can C.A. Sparkle do the audit? Yes. But after this 5 years, next how, so is it like now never C.A. Sparkle can do the audit again? Right, what does it say? Now for next 5 years, C.A. Sparkle cannot do the audit. So 32, 33, 2034, 2035 and 2036. 5 years C.A. Sparkle cannot do the audit. After 5 years, again can he do the audit for 5 years? Yes. Then after 5 years, again a cooling, chill, and a cooling period of 5 years. Right? Chill. They say auditor, 5 year you did audit, now cool down. How long to cool down? 5 year cooling down. You understand? Firm. Now if they appointed growth and ABC and company chartered accountants. So one term ho gaya, 26, 27, 28, 29, 30, 31. Then one more term of 5 consecutive years. Hai na? One more term of the 5 consecutive years. So 2 terms of 5 consecutive years. So up to 2036, ABC and company can do the audit. And then 37, 38, 39, 40, 41. In that case also the cooling period is of 5 years only. Are you understanding? Right? So whether it is an individual or whether it is a firm, cooling period is 5 years only. Right? So individual can do audit for 5 years, then cannot do audit for 5 years, then again do audit for 5 years, then again cannot do the audit for the 5 years. Firm, they can do the audit for, they can do the audit of the for 10 years, then they cannot do the audit for 5 years, then again they can do the audit for 10 years, then again they cannot do the audit for the 5 years. So cooling period is same. In case of individual, 5, 5, 5, 5. In case of firm, 10, 5, 10, 5, 10, 5, and it goes on. Are you understanding this? Okay. Right? So cooling period. Okay. Now, can the same partner of the firm, so now I'm talking about firm, tenure, can the same partner of the firm, can the same members of the, or can the same people from the audit firm do the audit for 10 years? Can PwC do the audit for 10 years of a listed company? Can PwC do the audit of a listed company for 10 years? Okay. Can the same partner, can the same, engagement team members, can the same team members do the audit for 10 years? No, it says the rotation of the engagement team members. You understand, engagement team, audit is an engagement. So those 40 people who are going for the audit or so. So rotation of the engagement team members is to be resolved by the members. The shareholders will decide. The rotation will be decided by the, so can PwC do the audit for 10 years? Yes, but can the same team of PwC do the audit for 10 years? No, the rotation will be decided by the shareholders. It will be the rotation of engagement team members will be resolved by the members. And today did I mention about SQC? क्या बोला था? SQC, standard on quality control. SQC 1, there is only one SQC. Hey, how many total AQCS were there? Oh, yo, oh. How many total EQCS were there? What is EQCS? Asking me only. Not good. EQCS क्या है? What is EQCS? engagement and quality control standards. What are the 5 types? SA, SRE, SAE, SRS, SQC. In total, 46. And out of that, applicable for inter, 27. 26 standards on auditing and 1 standard on the quality control. Are you understanding that? Okay. So SQC 1 says that the same partner who is audit partner, engagement partner, cannot do the audit for more than 7 years. So PwC, can they do the audit for 10 years? PwC, can they do the audit for 10 years? Okay. Can the same partner of PwC do the audit for 10 years? No. Partner can do the audit for the 7 years. Then if partner has done the audit for 7 years, partner has done the audit of a listed entity for 7 years, then what is the cooling period for the what is the cooling period of the firm? Cooling period of the firm? 5 years. What is the cooling period of the partner? 2 years. This is given in SQC 1. What is the cooling period of the you understand, the firm is still eligible. But 7 years, 1 partner. After that, that same partner cannot do the audit for next 2 years. And anyways, now only 1 year is remaining. Anyways, now what is remaining is only 1 year, because total you can do the audit only for 10 years. Now you say same firm cannot do the audit for more than 10 years. Same partner cannot do the audit for more than 7 years. And after 7 years, there is a cooling period of 2 years for the partner. For a firm, there is a cooling period of 5 years. For the partner, there is a cooling period of 2 years. Right? This is told in SQC 1 for the listed entity audit. You know, for listed entity audit. And listed entity audits. Are you understanding that? The same partner cannot do the audit for more than the 7 years. Okay, right. So now, can one partner be doing the audit for 8 years? One partner. हाँ ना, 7 year किया, फिर 2 year break, then again 1 year. So out of continuously he cannot, but out of the total 10, 8 years can the one partner handle that assignment? So you understand, only for formality's sake they may be getting it signed from another partner of the firm. But the partner who is doing the audit for 8 years, majority it is his control only over that audit. And now after, see, 8 years tak to he can do the audit. 2 years some other partner of the firm needs to sign. But ultimately after 10 years, so the audit will go. After 10 years, so the audit will go. Okay, now currently A is a partner in ABC and company chartered accountants, right? And they have done the audit of a company for 10 years, okay? And now 10 years, so rotation provision applicable, next 5 years they cannot do the audit, okay? That is why now say the company appoints PQR and company as their auditor. Okay, now this fellow, say CAA from ABC and company, who did the audit for 8 years out of the 10 years, he's very upset. Since morning 5 o'clock only, Ganga, Jamuna, you know, rivers flowing, territories and everything, tributaries and all coming out. My audit is going. My audit is going. So let it go, then new audit will come. No, no, my audit is going. So where it is going? Where it is going? PQR and company. He says, I am also going. And joining as a partner in PQR and company. What will happen? PQR even, they cannot be appointed as an auditor for the next 5 years. It's like a virus. That virus is there in you. Next 5 years, you go anywhere, virus carried over there. So you leave this firm and you join another firm. That other firm also cannot be appointed as an auditor for 5 years. Okay. Now, can a CA be a partner in more than one CA firm? So he is a partner in ABC and company. He is a partner in AMN and Company. He is also a partner in ALR and Company. Okay, APC and Company has completed their 10 years. Okay, now A is the common partner. Right? So even the other firms having a common partner have to follow the cooling period. Even the other firms cannot be appointed as an auditor for a period of 5 years. Okay, then today I told you about the network. Then North India and then East India, right? Then South India and West India, some CA firm. Say one of the firm from the network has done the audit for 10 years. One of the firm in the network has done the audit for 10 years. Now there are other 3 members also of the network firm. Can they do the audit for the next 5 years? No. Even one member of the network firm is cooling period applicable. It is applicable to all the members of the network firm. Are you understanding? Common partner, out. Cooling period, applicable. You leave one firm and you join another firm, out. You understand? Then members of the network firm, out. Out means what? All of them, they have to follow the cooling period. Are you understanding that? All of them, they need to follow the cooling period. Okay, listen to me very, very carefully. Okay, right? Sometimes when life is not in your favor, at that moment when you talk in the class, that question comes in the exam. Okay, so better be attentive in the class. Okay, so now 2026, CA, P did the audit. Can P do the audit? First year of audit, 2026. Okay. 2027 also CAP did the audit. Okay, can he do the audit? Individual, one term of 5 consecutive years. 2028, Q did the audit. They changed auditor, Q did the audit. Again, 2029, they appointed P as the auditor. Okay, then 2030, Q did the audit. Then again 2031, they appointed P as the auditor. Again 2032 also, P did the audit. Now my question is whether 2033 can P do the audit? Yes. What you are saying, yes or no? Yes. Okay, I have not taken your answer, but just I'll give you one more situation. And now, PwC did the audit of Growth Limited for 9 years. 9 years, can they do? Yes. Haan. Fir KPMG did for 1 year. Now you're saying how PwC, they can do for 10 years? Then you're converting 10-5 to 9-1-9-1. I said, because that's what is told in law. I will tell you what is told in law. So how to what do you say, override the law? 9-year appoint auditor, then 1 year change. Again 9-year appoint, 1 year change. So 10-5 converted to 9-1. Doesn't work this way. Can P did the audit in 2033? No. Why? Because consecutive years. You said consecutive years. Okay. Right? Consecutive years. Consecutive 1, 2, 3, 4, 5. Consecutive years shall mean all the preceding years. Consecutive years shall mean all the preceding years until the break is by 5 years or more. Cheating nahi, loophole covered. What cheating? Okay. Arey, let me complete na. Wait. Yes. 2026 P did the audit. Is it first year? Yes. 2027 P did the audit. Is it second year? Yes. 2028 Q did the audit. Is there a continuous break of 5 years? Is there a break of 5 years or more? There is only a break of 1 year. Will I continue with the consecutive counting? Yes. Then again, is there a break of 5 years? No. So will I continue with the consecutive counting? Yes. And now the 5 years of P are completed. Now for next 5 years, P cannot do the audit. And did you notice something? Array 7 year individual I'm talking about. Firm is 10 year na. हाँ, okay. हाँ, firm में partner 7 year, correct. This is individual. Either forget, this individual has been appointed as an auditor. Individual. Holding Sengal. You don't know Sengal? Okay. Right. Individual. Array, did you notice something, re Baba? What I ask and they say something else only. What you noticed? Array, that is not what you are supposed to notice. In this process, Q ka 2 years are also over. So Q can also do the audit only for 3 more years, 33, 34, 35. 36, they will have to bring R only into the picture. P का भी 5 साल अभी नहीं ना, अभी 2033 onwards 5 year. नहीं, 33, 34, 35, 36, 37, 38 P can do the audit. 3 साल Q, 2 साल R, हाँ, then P can come. Cooling period. Consecutive years shall mean that cooling period of 2 years is for the partner of the firm. The cooling period for the firm or the individual is 5 years. 7 year and 2 year is applicable only to firm. Individual anyway is 1 person. So 5 year, there is no somebody else to take over the work from you. Consecutive years shall mean all the preceding years until the break is by 5 years or more. Are you understanding this, everyone? Right? Rotation of the company auditor. What are we saying? Okay, before the appointment of the auditor, the written consent certificate is to be obtained from the auditor, and then the auditor will be appointed by the members who will hold office from the conclusion of the first AGM till the conclusion of the 6th AGM, thereafter till the conclusion of every 6th AGM. And after the auditor is appointed, the company will inform the auditor. The company will inform the auditor, and the company will file the form ROC. Yes, the company will file the form ADT1 with the ROC. Company will file the form ADT1 with the ROC within 15 days of the appointment of the auditor. Right, so company needs to inform the auditor and company needs to file the form ADT1. What is ADT? It stands for audit. And that we have appointed so and so as the auditor of the company. This filed form, they have to file it with the ROC within 15 days of the appointment of the auditor. Who has to file the form ADT1? Company. With whom? ROC. Which form? ADT1. Within how many days? 15 days of the appointment of the auditor. Right, so appointment of the subsequent auditor. Before the appointment, written consent certificate, then will be appointed by the members, and then the company will inform the auditor regarding his appointment, and the company will also file the form ADT 1 with the ROC within 15 days of the appointment of the auditor. Right, so if you look at this entire chart over here, in this one chart, we have completed the entire provisions regarding the appointment of the company auditor, right? Other than government company, there you can write it also includes the, correct, it also includes the deemed government companies. It also includes the deemed government companies, and then you have the subsequent auditor, the first auditor, and the appointment of the auditor in case of the casual vacancy. Right, so now accordingly you can draw the format and do the writing. Right, so other than government company, subsequent auditor, first auditor, and the casual vacancy auditor. Then you need to know 30, 90, 60, 30, 60, 30, 3, 30, 30. Draw, no? You drew? Less space. Yes, have you written? Then we can do the audit. Whenever there is a break of 5 years, then you start with one. Yeah, next period will start. But till the time the break is not of 5 years, you continue with the consecutive counting. Even for that it is required, but it is not mentioned over there. We'll come more to the provisions of the appointment. Yeah. So it will be a non-appointment of the auditor by the company, and then they can appoint, they can file the, pay the fine for not appointing. Appoint, but it will be non-compliance. Huh? No. Company will inform the auditor that we have appointed you as an auditor, and company will file the form ADT 1 with the ROC. Huh? Yeah, within 15 days of the AGM. ADT audit. ADT, form ADT. ADT is the short form for audit. ADT 1. We have 4 forms, ADT 1, 2, 3, 4. I'll show you all the 4 forms. It will be applicable. Because bank is also a company only now. We cannot. Written? I gave you time for writing, but you're so efficient. You've already written with me only. So the members will appoint the subsequent auditor, and the auditor so appointed, he will hold office from the conclusion of that. That is the tenure of office. From the conclusion of AGM till the conclusion of the 6th AGM, thereafter till the conclusion of every 6th AGM. Yeah, because up to first AGM it is first auditor, no? So that is why subsequent auditor is first AGM onwards. So you can just write next to that conclusion and 6th AGM rotation. So there we discuss the rotation provisions. Writing? No writing? Copying. In government company, every year the auditor is appointed. Till the conclusion of the AGM. So now within 180 days from commencement of financial year. So April financial year started. Then after that within 180 days appointed. So after appointment till the conclusion of the AGM is his tenure of office. 30th September, no? Yeah. ये तो it is special cases ना कि today company is incorporated, so first auditor is to be appointed, auditor died or auditor resigned, then auditor is to be appointed, but every year also auditor needs to be appointed ना. This auditor he concludes his tenure of office is only till first AGM. Who? You can, but his appointment is valid only till first AGM. Then if you want to continue his appointment, he has to be appointed by the members. Yeah. ये तो special provisions है, first auditor and casual vacancy. But routine course is तो subsequent auditor ना. Oh, sorry. Statutory auditor can be appointed. Because it affects the independence, because he is doing audit of the internal controls, so there might be some tax, he may not affect the independence. Huh? At any point of time, when you are being appointed as an auditor, you should not be holding the audit of more than 20 companies. That is how. Exceed more than 20 companies. So as on the date of appointment, today I am being appointed, today I should not be an auditor of more than 20 companies. Year nahi hota hai, it is AGM to AGM. How many? I'm not. How many? One. But if there is an extraordinary general meeting, any number you can conduct. Annual general meeting. Extraordinary general meeting. Right, so AGM is annual general meeting and EGM is extraordinary general meeting. How many AGMs in a year? Annual, one, and EGM as many as required. Right, auditor you appoint by passing an ordinary resolution or a special resolution. Did I teach you? Special resolution. Wherever not mentioned, it is ordinary resolution. Wherever not mentioned, how the auditor is appointed? He is appointed by the ordinary resolution in the general meeting. Have you written so far, everyone? Right. So then after this, we need to study. Like who generally appoints the auditor of the company? Members. So board of directors, little bit power given. Government company, CNAG power given. But other than that, general power to appoint the auditor has been given to whom? The members. Who can appoint the auditor? The members. But who can recommend who should be appointed as the auditor? The recommendation can be given by the board of directors or the audit committee as the case may be. Do you understand this term? Audit committee or the board of directors. Can they recommend appoint PwC? To whom do they recommend? To the members. And then who will appoint the auditor? The members of the company. Right? We take a break and then we shall continue at 2:15. Okay.